Though, as Critty, you pointed out, they keep the optionality there. Feels as if there could be a bit of volatility in individual names at the open then, Guy, as we wait for the start of Wednesday's session.
Yeah, how do we turn around Tuesday, Wednesday? I can't come up with something sort of alliteration around that, but it looks like we're going to see something of a pop as we work our way through the first few minutes of trade here in Europe. So here we go. Here is the opening trade in Europe this Wednesday morning. Let's get an idea of exactly how these European markets are going to progress. Looks like we're going to see a positive start. That's the expectation. London looks like it's probably going to outperform a little bit. Some of the luxury names are going to be under a little bit of pressure. Single stock stories back being relevant this morning. They weren't at the beginning of the week. They very much are now. So the stock 600 up by around 0.3%. FTSE 100 delivering maybe around 0.5%. We are watching to see how the Danish market opens at the moment. A little bit of underperformance coming through there, but it's a big focus, as Anna suggested. Maersk and Novo, of course, the huge weighting for Novo in that market. CAC's up by 0.5%. It's Italy's up by 0.7%. Looks like we're seeing a positive start this morning, but I think it's actually worth the deeper dive into these markets to figure out exactly what is happening below the surface. Critty, what are you seeing?
Yeah, well, when you look at the stock 600 immediately, and we'll wait a little bit for some of the early pricing to shake out, your outperformers, even though Novo Nordisk, I believe, is halted at the moment, as Anna points out, there is a little bit of outperformance in the biotech sector. So you have Roche, for example, Novartis, even over in the Swiss market, actually having your biggest index contribution to the upside in the stock 600. But to the downside, you're seeing that early pricing come out of Maersk as well, a whopping drop of 3.4%. So when you talk about the heavyweights coming out of the Danish market, those seem to be your big movers to the downside.
Yeah, it's interesting. When we talk to the Maersk management, they're telling quite a positive story, although with a lot of uncertainty in the backdrop as well. But interesting, as you say, then, that Maersk is that downward weight on stocks this morning. We're still waiting for the opening price on Novo Nordisk, as you say, open auction extension there. Banks. So this is where the macro themes come in, and what we heard from the BOJ overnight. We've got a risk on sentiment in markets, driven really by the fact that the BOJ, deputy governor there, saying overnight, we're not going to hike rates again if the markets are in turmoil. And certainly we saw some turmoil, and that turmoil didn't play out well for the banking sector here in Europe or in the States or indeed in Japan. There was a lot of expectation here in Europe about how fast we'd have to get to rate cuts as a result of market volatility. And so the banking sector bouncing back this morning, up by 1.4%, I can see on my screen.
Germany's really struggling to get open this morning. There's a whole bunch of stocks there that we're not seeing trading yet. So Adidas is down. Is that a read across into Puma? Maybe. I'm assuming it probably is. It's down by around 0.8%. So we are seeing some weakness there. Some of the car stock stories are coming back a little bit, which is interesting in Europe, despite what we've heard from Continental this morning, which again I think is interesting as well. Yeah. So I think we've got to wait for a while until we get some of these big names opening.
Can we point out also one of the biggest weights on the FTSE 100 specifically is Glencore, and you can see it on your screen right there. It is a very high volume mover to the downside, down about 2%, and it looks like it's that sensitivity to the story that they are not actually spinning out their coal business. So that's going to be one that we watch very, very closely. We know they were under pressure of it, and they are sticking to the line that, look, we still could spin it out, but we know that shareholders did eventually
good thing, though, isn't
yes,
the market wanted that, not that was the message from shareholders. That's why they're doing it.
Looks like Novo Nordisk just opened as well, down at about 6%, and now there you go. That's your biggest weight, despite the fact that some of his competitors were actually your biggest upside movers.
Right, just on that Glencore point, Bloomberg Intelligence pointing out that if they are not doing this deal around coal, then does this portend more acquisitions, which is something that can put downward pressure on a share price, isn't it? And so maybe that's part of it at Glencore. But the Novo Nordisk move then is quite substantial, down by 5.6%. And so we've got two fallers. It's not a sort of a two-sided story in Denmark, both of them negative. So these two heavyweights, Novo Nordisk, of course, by far the biggest, down by 5.6%, and Maersk also down by 3%. So some real weakness coming through for very different reasons.
Conti's up in Germany, 4.3% to the upside. That is where you're seeing the gains coming through. I was wondering whether Continental would be a negative story, but this morning it's actually
they cut their guidance.
It's proving to be a completely the opposite story. So maybe it could have been worse, and that's lifting the auto sector there. Beiersdorf down very heavily though in Germany. That's another name we're going to watch out for. So some real volatility in terms of the single stock names that we're watching this morning. We'll bring you the Puma trade when we get it. We'll continue to monitor what is happening with Novo this morning and some of the other names we're watching so carefully as we work our way through the opening minutes of this Wednesday session. Raj Shant, Managing Director at Jennison Associates, PGIM's Fundamental Growth Equity Manager, joins us now around the table. It's been a busy week. What do we make of where we are now this Wednesday morning? We've seen 3 or 4 days of quite significant volatility. Do you think we're done with that? Do you think we go back to the low volatility days we saw in the run-up to this move? What is your expectation?
Well, that's a great question, but just focusing on the earnings results you've been talking about, I think it's great when we can focus on the fundamentals of the companies.
Yep.
And we are beginning to do that. The market's a bit less focused on the backdrop. And I would argue that actually we've had a blow-off of some excesses. The returns in the equity markets were great at the first half of this year.
Yep.
As an equity professional, I like that, but you could see some excesses building. So that's kind of washed out. Over the summer, the volumes tend to be thin, so you get a bit of choppiness. Autumn can be seasonally choppy. But it seems to me that the worst is probably over. We might get another couple of weeks of bouncing around the bottom, but I wouldn't underestimate the importance of what the Japanese and the Bank of Japan have been saying overnight. I think that's really helpful. This carry trade out of the yen has been many, many years in the making and probably indirectly affects a lot of asset classes around the world. But
the reason for it is that we've been in a very low volatility environment.
Yes.
And to your point about the excesses that have built up in certain parts of the equity market, you could argue that's why we've seen the ability of some of the systematic trades, etc., to build up big long positions into the tech sector as well. That has also been aided and abetted, obviously, by the AI trade. The yen trade is also a result of maybe that volatility. If we're in a higher volatility environment, how different does the world look? I appreciate your focus on earnings, but how different does the world look if we can't see those excesses being built up?
Well, that's an interesting question, but I'm going to point out one element of it, which I think is circular. So the fact that the yen was such a guaranteed cheap way to borrow was a great trade into so many other asset classes, and every year that worked, the volumes got bigger. So we'll find out in the next couple of weeks and next couple of months how big the unwind has been over the last couple of weeks.
Yep.
But I think that in itself was part of the reason why we had such a low volatility environment. I've been a professional investor for 35 years. It's been a really unusually low volatility environment, and it's healthy to have some volatility, to have some two-way arguments on these big themes. Fundamentally, we see that the thematic growth drivers for the global economy are still in place. So if you think forward over the next 5 years, we still think generative AI is going to be absolutely huge. Yep. We still think these GLP-1 drugs like Wegovy are going to be absolutely huge. There are lots of interesting areas of innovation and growth in the world, but you don't want crowded trades and super low volatility and speculation kicking in.
Well, you mentioned the FX trade, and just as we were speaking, we got the COO out of Sony saying that they're closely watching the U.S. economy and FX rates, which I think is interesting commentary coming out of a CEO, or excuse me, a C-suite member of any company. But talk to us a little bit about this hunt for yield here, because it feels like that's what incentivized the carry trade to begin with. You had a stock market that was overvalued, arguably still is. You had a bond market that was juicy, but maybe not juicy enough. Private capital is off the charts because of that yield, hunt for yield. If you see this carry trade unwind, where do people go?
I think the carry trade was even more than just a hunt for yield, because I think the more that these crowded trades in generative AI worked, the more that certain specifics of popular trades were working, the more speculation there was into other parts of the system. And you saw the meme stocks kicked off again during 2024 as well. We thought that had gone quiet after the end of COVID. So I think the unwinding is healthy for future returns. a little bit more volatility than we've seen over the last couple of years would be healthy for future markets and future returns. So in that sense, as a fundamental investor, I'm all for it. I think, and this goes back to my first comment, I think it would be great if markets could follow the fundamentals. You know, the sales growth is good at this company. Profits have exceeded expectations. They're going to grow faster than we think. The share price outperforms. That's actually a healthy, fundamentals-driven market. What you don't want, I think, is a market where valuation multiples and huge moves are driven very much by, you know, this central banker blinked or you know, had a twitch in their left eye, and therefore we're going to sell off or buy the market. That's not healthy for medium-term returns.
What's the hedge in the medium term then? If it's not the yen right now, if that's too risky, if the dollar's overpositioned or a crowded trade, oil is doing its own thing, where do you hide out?
I'll tell you when I find out. I'll send you a postcard. But I really think it's go with the fundamentals. You know, there are areas of each asset class that I think could be very interesting. There are huge themes going on in the world. Generative AI is probably the biggest over the next 5 to 10 years. But, you know, even if you think about things like decarbonisation, if you think about...
Well, let's go back to the tech story really quick. Could tech be a hedge?
It could. I mean, I think a lot of the excesses seem to have been wiped out. A lot of companies that were getting rewarded for just mentioning investing in generative AI or having a generative AI product were benefiting without any real reference to the fundamental upside in terms of hard cash, extra sales, extra profits. So the fact that a lot of those have suffered the worst of the correction, and actually within the generative AI space, you're seeing the real value creators, which is still around their infrastructure ecosystem, because that's what's got to be built out over the next couple of years before we can actually enjoy the fruits of generative AI. I think the market's being more discriminating, more focusing on the fundamentals.
Yeah, it does feel as if it's just a cost. It's for a lot of businesses, it's a cost line, a huge investment cost line at the moment.
Yes.
And we wait to see it deliver in a different way on the top line. So talking about fundamentals, and Raj, you've mentioned fundamentals a few times. What do we see on the consumer, either in the States or globally right now? Because we've been thinking about lots of different, seemingly conflicting consumer trends. You've got Disney putting up prices. You've got rotation within the restaurant sector that Kriti was talking about earlier on today. I mean, what are you seeing on the consumer side? What's the sort of messaging that matters to you?
I think just generally across the board, we're somewhat cautious. So, you know, rates went up from very low levels for the best part of a couple of years. That was for a reason. That was to slow down the economies. The stimulation checks, or the stimmy checks, as the Americans call them, have generally been burnt through. The Chinese consumer is not feeling happy about the world. You can see the authorities are trying desperately to stoke up some demand, struggling to do that. So, you know, I think you've got the major consumers in the major economies around the world either staying at relatively low levels of demand like China, or rolling over from fairly high levels of demand like the US and parts of Europe. So it's a really tough environment. And the way we're approaching it is to say only the very strongest brands will really be able to get through this without being scarred. And so we're sort of in the luxury end, and within that, the strongest brands within luxury. So think Hermes, or Ferrari, where their consumers really aren't, you know, dare I say, affected by the things that most of the rest of us are in terms of employment and wages and stimulation checks.
And thinking about investment themes, we've talked about technology and AI as being one of them. Is the move into the middle class in much of the emerging markets world, is that still an investable theme, or is that something that we've seen a lot of and stalls from here?
That's a great question. So the exception to what I was just saying in terms of the big economies is probably really India, and then one or two smaller emerging markets as well, where you just genuinely see the structural uplift in the middle class, the structural growth in wealth creation there, overwhelming the cyclical global factors. But I think you have to be really, you know, it's got to be a rifle shot approach. There are many emerging markets where the consumer is suffering the same way as they are in developed markets.
Be selective. Raj, nice to see you. Thanks very much indeed for stopping by to see us. Raj Sand, Managing Director at Jennison Associates, part of PGIM. Thank you very much indeed. Let's quickly check some of those core stocks that we've just been mentioning and see exactly how they are trading this morning. LVMH flat as we work our way through this market. Ferrari flat as we work our way through this opening trade. However, the real action is elsewhere. Look to the left of your screen. Novo Nordisk, this huge weighting that we are seeing in European markets this morning, down by 6%. Little safety seeking this morning, maybe, in names like Nestle, but tech looks reasonably okay this morning, which is interesting. It's a pharma story. It's a stock reporting story, I think, this morning that is probably the more interesting one that we're watching out for. Let's talk more about it then. Let's get some more names and fold them into the mix as well. Joe Easton's got those. Joe, over to you.
So we've got to take another look at Novo Nordisk, Guy, because this stock is having its worst day in 2 years. It was down around 7% at the open, coming back very slightly, but the Wegovy sales miss and also the downgrade to profit forecast. It's a double hit for the company. They did recently announce the failure of one of their heart drugs, and that's where an impairment's coming in. But Wegovy, the real focus there. Glencore, meanwhile, declining despite the positive news around them not doing that demerger of coal. Analysts at Barclays saying that is positive, but the trading business actually suffering due to a recent decline in volatility in commodities, though you might think that might pick up given the moves that we've seen recently. Puma, meanwhile, absolutely slammed due to weakness in China, also some higher freight costs. According to the company, that's the worst performer today, down 11%. And then speaking of freight costs, we've got AP Molecules declining, actually seeing an easing in some of their profits given the jump in rates that we've seen over the past year, starting to come down very slightly for that one. In terms of some other movers, we're over at Continental in terms of the autos. Now, the margins are actually slightly better on that one, according to analysts today. And Anna mentioned earlier, Beiersdorf, the Nivea skincare maker, that one declining, a bit of trading down, according to analysts, in terms of some of the cosmetics markets. And a quick look at Ahold and WPP. Ahold, of course, the grocer, had the CEO on earlier talking about potential slowdown in food inflation, but still some pretty decent moves in that one. WPP slipping, the UK ad firm today. More earnings to come. We can't stop looking at earnings, but Evertech, this is a mid-cap biotech firm over in Germany, down 38% following some weak guidance from them. And over in financials, a couple to bring you. Commerzbank declining net interest margins. It's all about that over in Germany at the moment. And ABN AMRO actually holding up. TP ICAP in London, though, announcing they could potentially spin off one of their OTC interest rate businesses, but they won't be doing it in London. They'll be doing it in the US if they do it, according to a statement, of potentially a bit of a blow. But that stock up 13% on the London market. Finally, moving away from earnings, a couple of decent broker moves to bring you. Firstly, BP downgraded at RBC, a very contrarian call. They say that BP's leverage is too high, too much debt at the UK oil company, according to RBC at the moment. And finally, over in the car space, Stellantis, this one also downgraded. It's over at Jefferies. They say the company needs to focus on revitalising its brands, not just cost-cutting. They don't like that stock. They're downgrading it to hold. Stellantis slipping very slightly over in Milan this morning.
All right, Joe Easton there with some of the analyst calls and some of the earnings palooza moves that we are seeing early in the session. To me, of course, we are keeping a big eye on Novo Nordisk, guys, but the upside is biotech and pharma is still actually outperforming. There are a couple of names here, Roche, AstraZeneca, Novartis, all actually are biggest index contributors to the upside, while Novo is your biggest weight.
Absolutely, and net-net, that adds up to healthcare being the only sector that's in negative territory this morning. Elsewhere, we see positivity, but within these sectors, we see some interesting rotation. You've mentioned the healthcare story then, Critty. The banking sector stood out to me as well, where we've got Commerzbank down by 4.9%, ABN AMRO up by 3.3%, and different stories coming through there. Overall, the macro playing in favour of the banking sector. Some of those comments we've had out of the BOJ, risk-on mood in markets, it seems, as a result. And so the banking sector as a whole goes higher. So some interesting rotation. And then you've got Ahold going higher, Beiersdorf coming lower. So again, in sector rotation.
Feels like there's some portfolio effects. Come out of Novo, go into some of the other trades. Trying to figure out exactly what's happening with Commerzbank, trying to get a handle on this. Rising provision seems to be the sense. Dented profits. Concerns maybe around the next buyback tranche. And maybe that will now be lower than anticipated, is the read that I'm hearing from our team covering that one.
A lot to digest when we look at these markets. It's interesting that healthcare is the underperformer, and so is the Danish market. That's where we're going to go next. We're going to dive deeper into some of those numbers out of Novo Nordisk and Maersk, two of Denmark's biggest companies. They're live in Copenhagen with that story next. Stick with us. This is Bloomberg.
What's happening on Wall Street?
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
DOJ or other authorities.
Could face bigger challenges.
Was elected. Was going to keep reading World Cup. This is a story
as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Welcome back to the opening trades at 8:21 here in London, and European equity markets then overall going higher. The Stoxx 600 up by 0.5%. The macro story and some of the positive earnings stories we've had outweighing some substantial moves to the downside. Some of those coming through in Denmark. Over in the Danish market, Novo Nordisk is weaker, Maersk is weaker. Lots to deal with then out of Copenhagen this morning. Let's get an update from Copenhagen on what is happening with these Danish heavyweights. Let's go to Bloomberg's Sanna Vass, who's with us. Let's start with Novo then, Sanna. It seemed as if it took a while to get to for everybody to get through the earnings report this morning. There were a lot of elements in it to do with impairments, but some of that was known. How is the Wegovy story doing, backward looking and in the guidance? Put it all together. What were the key takeaways for Novo?
Yeah, so first of all, we saw that Novo increased its sales of its blockbuster drugs, Ozempic and Wegovy. And in fact, it also increased its sales forecast for the full year. But that just didn't seem to be enough for the investors, and Novo shares are down quite a bit. Wegovy sales missed estimates, and Novo also went out to say that it would still restrict the sales of Wegovy starter doses in the US. So it seems to be that there's still some way to go for Novo to really boost supplies and meet the high demand. At the same time, Novo also cut its profit forecast for the full year. And it shows that despite the popularity of these drugs, it is really also facing some bumps on the road. It took quite a big impairment charge in the past quarter because of a failure of a late-stage study of one of its experimental heart drugs. So certainly that is likely to have had a drag on profits and the decision to lower the profit forecast for the year.
Sanna, I want to flip to the other major stock that's taking a beating this morning, and that is the Maersk story. And we'll square it back with Novo in a second. But walk us through then the pain that you're seeing in Maersk.
I mean, interestingly enough, Maersk actually has raised its forecast a lot of times, actually 3 times in the past 3 months, and most recently last week and today it restated this forecast, and it's really benefiting from the conflict in the Red Sea, where Houthis attacks are making the sea route really unsafe. This is causing, has prompted Maersk to deroute its ships south of Africa. It's pushing up freight rates and benefiting Maersk more than it had anticipated earlier in the year. I suppose what investors are concerned about is how long will this last, because it is really an industry that is struggling generally from oversupply, and what will happen when the Red Sea conflict hopefully at some point unwinds or de-escalates. So that is a big question for investors.
Sana, can I just come back to the Novo Nordisk story? Is the biggest risk for Novo Nordisk right now high expectations? Is that the threat to the share price, rather than kind of the individual details around kind of which drug is doing? Expectations are so high. I appreciate the share price has come off quite a bit already, but it still trades on incredible multiples and still has an incredible valuation. Should we just get used to quite significant amounts of volatility around its earnings?
Certainly, that share price is based on future expectations for Novo, and the expectation that Novo will be able to ramp up supply quickly and meet this massive demand that there is for weight loss drugs. But of course, there are also risks for Novo Nordisk, especially with competition. So Eli Lilly, for example, already has a weight loss drug on the market. For now, it seems that the market is big enough for both of them, but we're seeing now other companies make announcements. A Swiss pharmaceutical company, Roche, just a couple of weeks ago, said that it would move on with trialing a weight loss pill. Viking Therapeutics in the US have also advanced a study of their weight loss drug. And so all of those news are impacting Novo stock, because it could be seen as a threat down the road. Definitely. So far, not a massive amount of competition, but the threat of it is definitely impacting the shares.
Yeah, a bit more volatility. Volatility is maybe something that we've got to get used to. As you say, expectations, concentration in some of these stocks, absolutely extraordinary. Some of us in Copenhagen running us through some of the Danish names that we need to be watching out for this morning. Novo, clearly the big one, but Maersk, I think, is absolutely fascinating this morning. Talking of Novo, we are going to be speaking to the company's CEO a little bit later on. This is Europe's most valuable company. Our interview with Lars Fruergaard Jørgensen of Novo Nordisk is at 9:20 a.m. UK time. Francine will be speaking to him a little bit later on. We are going to be speaking to the president of Cyprus in just a moment, getting a take on what is happening in that part of the world. A lot of tension. Is it going to spill over into Cyprus? We'll talk about that next. This is Bloomberg.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie going begets movie going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome back to the opening trade, 30 minutes into our trading session this morning. And it feels as if the macro story, the risk-on story, perhaps being reinforced by the BOJ's deputy governor, is outweighing nervousness around earnings, because there's plenty of nervousness around some of the corporate performance we've seen this morning.
There is, and yet net, when you look at the European stock markets outside of Denmark, you're seeing green on the screen. And that's really just a Novo Nordisk America story as well. And yet, even with the buybacks, some of the concerns about profit guidance, you're seeing some individual pain. And yet, macro, to your point, a bounce back.
Yields are sharply higher again. So this trade is, this idea that we are going to see sharply lower yields is beginning to unwind quite quickly. And it's going to be interesting to see how far that goes and how much we are going to price out in terms of some of these central bank expectations we built up over the last few days. So I think that's going to be really interesting to watch. And there's this huge debate now about whether or not it's 25 or whether it's 50 or when those central bank cuts come. And I think that's going to be one that we're going to have to live with for the next month.
Yeah, absolutely. So we'll continue to cover that macro story and all of these micro read-throughs. Let's turn our attention, though, to geopolitics, something we will also be, no doubt, thinking a lot about in months ahead. Hamas has named Yahya Sinwar, the alleged mastermind of the group's October 7th assault on Israel, as its new political leader. The choice sends a message of defiance and is seen as a blow to efforts to broker a ceasefire. Sticking in the region and where the Middle East meets Europe, the island of Cyprus has acted as a staging post for American and British jets in the conflict, as well as for aid for the Gazan people. Joining us now for an exclusive interview, I'm very pleased to say that the Cyprus president, Nikos Christophylidis, is with us from the Republic of Cyprus. President, we welcome you to the program. Thank you very much for your time. I wonder, when you look at the latest developments in the Middle East, how concerned you are, in particular around Hezbollah and Lebanon, how concerned you are around wider conflict in the region?
Good morning from Nicosia. As you know, we are the closest EU member state in the region. We're the country with excellent relations with all interested parties, and we're trying our best as a country of the region and as an EU member state in order to calling all parties to refrain from further escalating the situation. So we're in close contact with Egypt and Jordan. You know that they are playing a very important role in order to avoid further escalation. In our case, at the same time, we are getting ready to evacuate European or third country citizens from the region in case of a need. So whatever we are doing is to show that as a country we are predictable, reliable partner, and we're trying and we're concentrating at this moment to avoid further escalation.
Are you concerned, and I emphasized in the introduction there, President, the fine line that you're walking. Are you concerned that Cyprus gets pulled into this in any sense? Hezbollah has threatened to retaliate against Cyprus if it helps Israel to attack Lebanon. I wonder how you view that kind of rhetoric.
Look, first of all, of course, we are concerned as a country of the region. Just to give you an idea, where we are located, Cyprus is 25 minutes flight from Lebanon. We're 40 minutes flight to Israel. So we're part of the region. We're very concerned. We don't believe that this kind of rhetoric can solve the problem. So that is why we're working publicly, but also, as I told you, through other countries of the region in order to avoid further escalation. We believe that nobody is winning with this rhetoric. It creates more problems, and what we need to do is to concentrate on how we, and this is a key, I believe, how we resume the negotiations for the solution of the Palestinian issue. I know it's very difficult to have it now, but we need to work towards this direction because it's the only way to solve the problem in the region. Because the root causes, let's say, of this situation comes from the Palestinian issue.
Mr. President, is Cyprus neutral? Can it remain neutral? What will it take to remain neutral?
As I told you before, we have excellent relations with all interest parties. We're working together with Israel, with Lebanon, with Palestine, Egypt, Jordan, with all countries of the region, so we can play a role. And this role, we try to do it also with the humanitarian corridor that we set up here in Cyprus in order to help the Palestinians in Gaza. So we are accepted from all interested parties and honest, let's say, honest broker. We talk to everybody. I was in Egypt, then I went to Israel, I went to Jordan, I went to Lebanon with the president of the European Commission. So all of our efforts are towards the direction to not to further escalate this situation.
Okay. How close are you, do you think, to having to activate the evacuation plan? Are you ready for that? Have you received any requests for that activation plan, for that evacuation plan to be activated?
Of course, we're ready, and already I can tell you that some countries they have their diplomatic staff. They move their diplomatic staff from Lebanon to Cyprus. At the same time, we have requests from more than 10 countries in case of a need to use Cyprus as for evacuating their citizens from the region. We did it in the past. We did it in 2006 with the crisis in Lebanon, and we are ready to do it now. I hope that we'll have a positive news and there will be no need for evacuation, but in case there is a need, we are ready.
President, I'd like to talk to you about the 50-year-old division of Cyprus itself. Do you think reunification on the basis of that bizonal federation is possible, or is another negotiation needed?
Of course it is possible, and that is why I'm working towards this direction. Unfortunately, until now, Turkey is refusing even to discuss. We're trying with the UN Secretary General, with the European Union, in order to resume negotiations. And having in mind that Cyprus is a member state of the European Union and will continue to be a member state of the Union, following a possible solution of the Cyprus problem, I really believe that the solution of the Cyprus problem based on bizonal bicommunal federation is possible. You know, the status quo in Cyprus, the status quo of the last 50 years is not an option for us, cannot be the future of Cyprus, and we will do whatever is necessary in order to resume negotiations, substantial negotiations, in order to reach a settlement.
You outlined a little bit there of some of your red lines, but I'd like you to expand on that, specifically because you've referenced that potential trilateral meeting with the UN. What are your red lines here?
What?
Well, you talked a little bit about what isn't an option on the table. Do you have potential alternatives, things that if Turkey isn't amenable to, other alternatives you'd be considering?
No other option is possible for solution of the Cyprus problem. I mean, Turkey is putting forward some ideas for a two-state solution or a sovereign equality. those options are not on the table. And this is not the position just of the Republic of Cyprus or the Greek Cypriot. This is a position of the international community. The Cyprus problem, and we are investing a lot. That's why I mentioned before the fact that Cyprus is a member state of the European Union, and all the pending issues that we have between Turkey and Cyprus can be solved within the context of the European Union. The European Union can provide us the solutions for all those pending issues.
And can I just clarify, President, this meeting that's been proposed by the United Nations on August the 13th, you mentioned the reluctance of Turkey to participate. Do you think it is happening? Is it going to take place?
Unfortunately, as you mentioned, Turkey refused to meet on August 13th. But I'm optimistic. I'm doing whatever is necessary. I'm very happy that the Secretary General, the UN Secretary General, Mr. Guterres, is committed to finding a solution of the Cyprus problem. At the same time, the Republic of Cyprus is ready to see and support positive developments on the EU-Turkey relationship, always in line also with progress on the solution of the Cyprus problem. So I see a win-win situation from the resumption of the talks and the solution of the Cyprus problem, together with Turkey coming closer to the European Union.
President, I'd like to talk to you a little bit about the energy story globally. We know that LNG flows have been a very hot topic post-war, the war between Russia and Ukraine. And I'm curious where Cyprus plays a role there, specifically when it comes to certain construction projects that have fallen apart. Walk us through the future of the LNG story in Cyprus when it comes to that global export story, but also specifically in regards to the Aphrodite field.
You know, it's very important having in mind what we learned from the Russian invasion in Ukraine and the energy dependency of Europe from the Russian gas and oil, that we use all the potentials of the Eastern Mediterranean. It's not only Cyprus, it's Israel, it's Egypt. Some other countries also right now are in the process of trying to find oil and gas, and we can use the Eastern Mediterranean as an alternative energy route for Europe. And I'm happy that the European Union is investing in this option, in this possibility. At the same time, internally, one of the major challenges that we have to face is energy. We're using the renewable is one of the options that we're using. The LNG, as you mentioned before, also the interconnector between Cyprus and Greece, and we're trying to face this, I would say, bigger challenge that we have internally.
Mr. President, final quick question. Do you think a Cypriot should be the new commissioner for the Mediterranean? Would that be a logical choice? Have you got any names in mind?
First of all, let me welcome the decision of the President of the Commission to have this new portfolio. It was something that Cyprus, together with other Mediterranean member states, they were insisting in order as a European Union to show that we are really interested about the Mediterranean. I don't exclude the possibility. What is important is to see the administrative structure of this new portfolio, the possible funds, etc. We need a portfolio that will have a substantial role, not just a portfolio with a title without substantial, let's say, competence in order to play a role.
President Christodoulou, thank you very much indeed. A great pleasure having you on the program, the President of the Republic of Cyprus. Let's stay with the geopolitical story, and the US ambassador to the UK, Jane Hartley, has praised NATO allies for boosting their defense spending amid regional tensions. She spoke exclusively to Bloomberg's Francine Lacqua.
We know how important multilateralism and how important the allies are to President Biden. For years, remember, he headed up the Foreign Relations Committee, and the first thing he did when he came into office was come over to talk to the allies. We see what he's done and what we've all done, but what's happened to NATO in terms of the expansion of NATO and the strengthening of NATO. You can't do these things without allied support. And I think in Europe, what's happening is not only is NATO being strengthened, but people are re-looking at how much money goes to defense. And I think that's a real positive.
The US Ambassador to the UK, Jane Hartley, speaking to Francine Lacroix. If you'd like to see more of that exclusive interview with Francine, you can find it on The Pulse. It'll be coming up in around 15 minutes' time. The programme, maybe not the interview. Maybe that comes a little bit later. Anyway, what have we got coming up on this programme? Shares in the global sports brand Puma are sinking sharply. This after the company has lowered its profit outlook amid higher freight costs and a slowdown in China. We're going to break down what's going on at Puma. We'll talk about that next. This is Bloomberg.
I decided to acquire Indeed 12 years ago when I was 36. I couldn't speak English, but I decided to move to the US with my family. Okay, let's study English. Let's, manage this big, American company. But I could do it. Ages are just numbers. If you stay being very curious to run new things, you can keep doing that. So what we're trying to adjust is our company should be the place to maximize people's ability, people's talent, and people's passion, right? Our employees' passion. So we believe that if we can have the work or the vision, people can be passionate, and which is aligned with all what employee wants to do, that's the best way to maximize the people's ability.
Follow your passion.
That's right.
So whether you're 14 or 40 years old.
I think so. Because, what's the difference? I don't know. We might be totally wrong. That's how we have been running this company for 60 years.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Billionaire Gautam Adani founded one of India's biggest and most controversial business groups. After being rocked by accusations from short seller Hindenburg Research last year, Adani is now preparing for the company's future in a real-life succession story. Meet the family members he's handpicked to take over the business as we deep dive into the facts and rumors surrounding the Adani Group. Inside Adani, a Bloomberg exclusive, premieres Friday only on Bloomberg.
Welcome back to the opening trade. We're about 47 minutes into the European trading session. You were seeing green on the screen when it comes to the major indexes. A lot of positivity out there as we see a little bit of a bounce back from the carnage we saw earlier this week. And then you dive into the micro. There's a couple of individual stocks that have really been moving to the downside. Novo Nordisk, of course, getting a lot of the attention. Maersk as well, the Danish market as a result, taking a hit. And then there's Puma, down a whopping 11% in just 47 minutes into the trade. It is the biggest stock market decline since March of 2020. Now, what is driving it? When you look at the actual results themselves, they're actually attributing it to weakness in China, but they're also talking about global freight rates rising. I think this is really interesting that we're seeing a direct read-through from some of the increasing rates that you were seeing in the shipping industry. We talked to the Maersk CEO earlier in the program about that, directly into the consumer and the consumer story over at Puma. Let's get a little bit more on the details here. Bloomberg's Dasha Afanasieva from our consumer and healthcare team joining us this morning. This is a weird one. Walk us through the connective tissue here and how quickly the freight rates show up in some of that pricing.
Morning. So they've downgraded their EBIT outlook to between 620 million euros and 670, whereas before we were expecting up to 700. And for several quarters now, they've talked about the freight volatility and the impact that it's been having. But it's the first time that they've actually done a downgrade on the basis of that. And it's not just the freight stuff. I mean, we've had around 6 months of regular attacks on vessels in the Red Sea that stretched the whole sector, as the Maersk CEO told you about. But we also have the China slowdown, and that's been a really massive thing for Puma. And of course, China's been a really difficult market because there have been boycotts of Western brands like Puma, Adidas, Nike. So it's a really hard-fought market over there. But retail sales are not growing very much, and there's lots of concern around that.
Does this fit with what we're seeing elsewhere? So Adidas is having quite a great time of things at the moment. Its brands are really working. Is it just if you don't have the right brand in the right place, you are unable to therefore pass on the higher prices and deal with some of these costs that we're facing at the moment? Is that what we're watching here? Are there any positives in this story? Are some of the brands beginning to do a little bit better? Or kind of what is going on below the surface in terms of actually what they're delivering to the consumer, rather than kind of the operational story, which is the freight rate story?
Yeah, I mean, in some ways, Puma has been aware of kind of the changes that it needs to make in order to have sustainable growth. Last year, it had a reorganization, and it's really focusing towards more premium offerings, particularly in the US. Like, get rid of the cheap stuff and just appeal to sort of stuff that people are really going to treasure and going to possibly save up for. So it's been a lot more aware of it than, say, maybe Nike, that's in trouble, paying catch up, a lot of pressure on management. So I think even though up to 12%, I think today, or 13% even fall is really painful, in some ways, at least Puma has demonstrated that there's a strategy. They have the right products. And that they have the right products, and maybe just the awareness of how to get there.
Okay.
And Dasha, I was reading the story by our colleague Tim, and interesting that I think of this sector and I think about marketing, because there's a lot of it from this sector. But Puma recently launched its first brand marketing campaign in a decade, looking to capitalise on the summer of sport that we are enjoying right now, and to try and make the most of that pivot that you describe away from the lower value to the higher value products. I mean, does that surprise you that a business like Puma is not advertising? You cover a lot of businesses that spend a lot of money on advertising.
Yeah, I mean, I think the Nike and Adidas rivalry, and these massive campaigns that they do, and that you have to win a season, win a summer. I think it does make it seem a bit like Puma's sort of left behind. But I think sort of that they're still doing marketing. It's kind of, what do they call it, and do they earmark it as this big campaign? And I think if anything, that sounds like wanting to reassure investors of a robust strategy of being really competitive with these other brands in an increasingly competitive sector.
Okay, Dasha, thank you very much for joining us. Bloomberg's Dasha Afanasieva with the latest on what's going on over at Puma. Let's dive into some of the earnings stories that we have been following today. And one of the names that's been moving to the upside, if that's still the case, yes, is Ahold Delhaize. Just want to mention this one, up by just shy of 5% this morning, on the rise as it beats estimates, essentially, this business. Promotions in focus. Can it sustain the performance into the rest of 2024? That's one of the questions being asked by analysts this morning. But for the moment, that stock firmly on the rise.
Let's talk about Novo. So Novo's we're getting some really big reactions this morning, right?
Yeah.
Novo is obviously the one that we're watching out for. I think it's off the lows now, so we're still down, but we're still down by 4.5%. Is it just that you've raised expectations to such a high degree that we are so sensitive to any marginal level of disappointment that we get big reactions? And is that what we're basically witnessing here today? It's a bit like, so NVIDIA, and is this a warning for other areas where expectations are so high as well? I always think about NVIDIA and Novo in kind of the same breath. Expectations super high, tiny little marginal misses, and it was NVIDIA earlier this week, maybe they've got some problems with the Blackwell, you get a big reaction in the share price. Novo, you get some slight issues in terms of production, you get a fairly big reaction. Is that where we're at now? And is that what we're ultimately going to have to deal with as we track these stocks through this whole sort of I find it fascinating how the market reacts to
Yeah,
this
absolutely. Our story this morning talking about how it's disappointed investors with a rare misstep, and I think that's it. If you set expectations high, if the market, if Europe is very focused on this business, which you know took the top spot as the biggest company in Europe, that's going to be the level of attention. How big is the misstep, though? Yeah,
that is the question. You get huge market cap changes of tiny little marginal moves.
You made the parallel to NVIDIA, and I feel like you're the perfect person to ask this. Is this also not a parallel to kind of what we hear out of Boeing and Airbus, in that there's so much demand, and then that creates a massive backlog, and then you have the supply constraints on top of it? So even if there is this kind of burgeoning demand, you can't actually meet it, and that works against you?
Yeah, there are industrial shortages around the world.
Right.
And you are continuing to see them. And that is continuing to be problematic. Airlines is one area. You could have argued that the airline sector should have got its act together a little bit earlier. The aviation sector should have got its act together and fixed this problem a little bit earlier. Novo, this demand for this product has come out of nowhere. And we're expecting this company to ramp production so quickly in order to be able to satisfy that demand. It's incredible. And the generative AI story is in so many ways a similar problem. Huge demand suddenly comes. And companies take a while. The sequencing is not always going to be as investors want, but investors price kind of 5 years down the road.
It's also a consumer story, though, isn't it? Because if you're talking about disposable income faltering in the airlines and Airbnb, you name it, dare I say McDonald's for a third time on the show, but isn't this a consumer story that perhaps down the line, if you're talking about a weaker consumer or a weaker economy, maybe obesity drugs isn't where your money goes? Isn't that a
luxury? Who's paying for them, I guess, as well, doesn't it? I mean, in different models in different parts of the world. Should we talk about another sector in focus, and that is the banking sector? Because broadly, we see a strong banking sector, Kriti, but then we've got Commerzbank shares dropping, the down just shy of 4%, the new buyback failing to impress. And I think you were asking, why do we not get confirmation, or maybe Guy was asking, why do we not get confirmation of the buyback for the second half? And there was this message, well, we have to wait and see what the second half numbers look like before we commit to that.
Yeah, so the loan loss provisions were also elevated in that scenario. They just basically said, look, we're going to look through it. We're going to basically kind of full steam ahead. They also talked about this litigation overhang in Russia, the FX hit that came out of Poland as well. They're dealing with a lot of issues, and yet they seem very confident on the buyback story.
They do seem fair. Well, they do seem confident, but there's some uncertainty. And the market doesn't like that uncertainty. It doesn't know the metrics by which it is judging that. Q3 numbers, let's see what they look like. But the provisioning thing is interesting as well. Is this start of a trend? Is this sort of something that we're going to get used to quarter after quarter as provisions ultimately get raised? There's uncertainty in these numbers, and maybe that's just simply what the market is reacting to.
And you think about Germany, and you think about the auto sector, and every time we talk to Craig Trudell, you feel a little gloomier. No offence, Craig, but you feel a little gloomier about what's going on in the auto space, because he brings you these stories of demand not living up to expectation. We're going to be thinking about the consumer later on today as well, aren't we? Because we're going to get some numbers out of the likes of Disney. We had some pricing data that seemed like it showed confidence.
A 25% increase in their streaming channels, which is a pretty big one. And given that it's a part of so many people's disposable income, again, bringing it back to the disposable income story, this is inflationary. We'll see if the earnings match some of the worries that are in the markets right now. I believe those earnings coming
How elastic is that kind of demand, I wonder, or not?
Or not, I think is the case. We're going to get pre-trade as well on Airbnb, which I think will be fascinating as well. Bill Dudley's going to be coming up a little bit later on. He was a hawk, he's now a dove. He's a Bloomberg opinion columnist. He's going to be joining Surveillance a little bit later on. That is going to be a conversation you want to pay attention to. Francine's up next. The Pulse is coming. This is Bloomberg.
multi-trillion dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Stocks rally and the yen drops after dovish comments from the BOJ as the central bank moves to calm market turmoil. Novo Nordisk plunges after cutting its profit forecast for the year as its blockbuster weight loss drug Wegovy falls short of analyst expectations for quarterly sales. We'll speak to the chief executive at 9:20 a.m. Plus, Kamala Harris takes aim at key battleground states after picking Governor Tim Walz as her running mate to take on Donald Trump. Well, our exclusive interview with the U.S. ambassador to the UK coming up a little bit later on. But first thing is first, again, happy Wednesday, everyone. It's been a week and a half. It feels like the week, it's only been 3 days. It feels like it's been at least 10 days because of all the market volatility. Now, European markets are still rebounding. You can see the FTSE gaining some 0.9%, as is the CAC 40 and the FTSE MIB over in Italy, the DAX gaining 0.7%. Remember, we started Monday with a huge sell-off. Now, a couple of catalysts at the time. This was a carry trade because of yen, so we spent a lot of time this hour looking at what the BOJ can do next. They came under increased scrutiny, but also, of course, criticism for some of the policies that they put in place. And then there's concern about AI and what the Fed does next. But stocks continuing to rally. Again, the BOJ actually reassuring markets in the wake of this historic volatility that was sparked in part by its unexpected rate hike last week. S&P futures gaining some 0.5%. You can see the 2-year stabilizing. And then we always look at Brent crude 76.75 because of all the concerns in the Middle East. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning and welcome to The Pulse. I'm Francine Lacqua here in London. Now, shares have rallied after the BOJ's deputy governor have said it won't raise interest rates if markets are unstable. Let's bring in Marcus Morris-Ayton, portfolio manager for European and Global Growth at AllianceBernstein and Bloomberg's Justina Lee. So thank you, Marcus, for joining us. Justina, what a week. It's only Wednesday. It feels like it's been like a month and a half. Finally, a little bit more stability, but we still haven't recouped all of those losses.
Yeah, no, we haven't. And I think it really shows that, it's not just about the BOJ. It's also about how quickly the narrative has changed in terms of the U.S. economy. From bad news is good news to bad news really is bad news. And I think people are kind of adjusting to the reality that the U.S. economy is slowing, even if I think that people are now kind of waking up to perhaps a recession is not imminent, but we do need to adjust those expectations regarding AI and regarding where the U.S. economy is going.
Marcus, do you think the reaction or actually the reality has changed somewhat at the margin, partly because of the carry trade, but just partly because now we worry about the Fed not managing a soft landing?
Yeah, what a week indeed. And I think us, along with many investors, were surprised by the extent of the market reaction. Because as Justina said, the market reaction seemed disproportionate to the data released.
That said, macro data has been mixed for a while now, and valuations certainly have been rich in parts of the market. So it might be the case of the employment data really being the straw that finally broke the camel's back. Where we stand today, I think our view of the world hasn't fundamentally changed. The world is definitely slowing, but we're very much in the soft landing camp. And the positive we have now is that the valuations have pulled back, and you will certainly see an accelerated easing campaign from many of the central banks across the world.
But Marcus, at the end of the day, I don't know whether it's volatility, which often happens in August when a lot of people are on holiday, or whether actually it's also traders just trying to adjust for more risk because they were too optimistic before.
I think there's certainly an element of that, and you've seen the move we've seen in markets this year, and as Justina said, investors were very prepared to look through the bad news and almost view bad news as good news, and that narrative has now changed, and when it changes very quickly.
Are we expecting more of these kind of intense volatility? And again, we're still trying to figure out exactly. It was also almost unfortunate that Warren Buffett, that his cutting on Apple by 50% happened on that day where there was already a lot of turmoil. But can we expect these days of massive volatility, or do you think something deeply has changed? Justina?
Well, I think that we're probably not going to see the same degree of volatility that we've been seeing. I mean, one good news from kind of the past few sessions is that on Monday, we actually saw hedge funds buying the dip, according to Goldman Sachs' prime brokerage data. So I think, and then another good thing is also bonds kind of played the role of a hedge here. So at least it's not like your whole portfolio was losing money. And I think that's kind of helped a lot of people hold on to their positions. But I think in terms of the adjustment, were those valuations in U.S. mega cap stocks justified? And I think we still might see a bit of movement there, but not perhaps as dramatic as we've seen in the last few days.
So Marcus, how do you rebuild your portfolio?
Yeah, I mean, we're trying to be selective and pick out opportunities where we feel the move has been disproportionate. And one area of that is in certain semiconductor names. And you've seen a big sell-off in the semiconductor space in the last, actually beyond the last week, in the last 3 weeks. So our largest position is ASML, which I think is probably one of, if not the best positioned companies globally at the moment. The shares are off sort of 25% in the past 3 weeks. And actually the earnings picture beyond this year looks incredibly healthy. And they've got a capital markets day in November where they will map out the next few years. So it's a stock that we remain very, very bullish on.
What did you pick out in terms of earnings overall, Justina? Some of them, I mean, I'm looking at Novo Nordisk. They got slammed because they disappointed. And I don't know whether it's very difficult for some of these bigger companies that have been top of their game to actually meet market expectations.
Yeah, I think on the aggregate, I mean, earnings were not terrible, but I think two things really stood out to investors here. One is, for a lot of the really hyped up names, it seems like a lot of the AI investments are not turning into revenue just yet. And that's proving to be a concern for investors at a time when, interest rates are at 5%. Maybe they don't have that patience anymore. And I think another trend is we're really seeing in a lot of these consumer companies that maybe they're not able to charge those high prices as before. Consumer demand is slowing, and even, kind of among the, Pepsi and the like. So it does seem like that trend has been pretty concerning for investors.
Marcus, I mean, you mentioned ASML. In general, what do you do with industrial autos? I mean, do you have a good breakdown of some of the industries that you like and don't like?
Yeah, so within semis, actually, you've seen huge divergence between the sort of tech-related semis and, as you say, some of the industrial and autos where the slowdown has been a bit more magnified. And as Justina says, I think the consumer space is one that is concerning because a huge number of the profit warnings we have seen in the quarter, and there haven't been too many, have targeted consumer weakness. And that's particularly in the consumer discretionary areas, so airlines, travel, luxury, and actually autos as well. And what we've seen many companies doing is to try and stimulate consumer demand. They've been offering unusually high promotional or discount activity. And the worry there is that will ultimately feed into margins later down the line.
How much is China's story for luxury? And again, luxury kind of, even the luxury, the stocks that were outperformers have fallen pretty hard in the last 5 months.
Yeah, the luxury story is fascinating because you've got huge disparagence between the winners and losers in the luxury space at the moment. And actually you've seen the best performing ultra high net worth luxury brands like Hermes still generating double-digit revenue growth. And on the flip side, some of the more aspirational brands like Burberry and Kering, for example, are experiencing double-digit declines. And the problem with luxury companies when they see a top-line slowdown is there's huge negative operating leverage in the system. So actually, Kering's 11% revenue decline equated to a 40% EBIT decline.
Yeah.
As you said, China is a big issue here, but actually I think many of these luxury brands have been so aggressive in pricing over the last few years that the consumers are having to sort of stop and pause to see whether they can pay these higher prices in a weaker consumer environment.
Justina, what do we know about tactical buying, or how many investors are buying the dip at some of these levels?
Yeah, it does seem like quite a lot of investors are doing it, whether it's like retail and institutional. And I think it speaks to the fact that despite the initial scare Monday morning, at the end of the day, people don't actually think fundamentals have deteriorated to an extent where you need to sell everything. I mean, we talked about kind of hedge funds actually buying the dip on Monday. And I think that's generally been the market color here. And so, you know, we've kind of anecdotally heard about, you know, retail investors complaining about kind of their brokerage apps kind of breaking down, right? And so I think that's kind of been pretty helpful here, and I think that's kind of supporting the rebound.
That does not happen to markets. So you've been tactically buying on the dip?
Around the edges. I mean, we have a very long-term horizon and actually try and benefit from the volatility, and that's one of the beauties of being a long-term investor, that actually fundamentals change a lot less quickly than valuations change. So you can benefit from those.
Okay, BOJ. I mean, this is like the big one. I don't know, do we feel bad for them, Justina, that they're now trying to kind of put plasters on some of the damage?
Yeah, I know. I do feel a little bit bad for them because at the end of the day, it wasn't just them. It was also the U.S. jobs report, Warren Buffett, as you said, and the confluence of all these factors. But you can tell now they're pretty uncomfortable with the market volatility and the surge in the yen. And so what they're saying here is, you know, we're not going to raise rates as long as the markets are this volatile. And I think this kind of is giving a lot of leverage players some breathing space. And of course, a lot of kind of money has probably gone out of these carry trades over the last few days. And so the question still remains, I mean, there are still kind of many months to go by the end of this year. And so are we still going to get one more hike from the BOJ?
So do you think they've now turned dovish? And we've seen some of these dovish signals, or are they just going to telegraph hikes better?
Yeah, I think it's probably more the latter. I mean, they still need to pay attention to their own inflation picture. I mean, the good news about Japan here is they're not really in the position that the Fed was in, you know, a year ago. You know, they don't need to worry as much about being behind the curve here. And so they can afford to wait. But I don't think they want their hands to be tied by the markets at the end of the day.
Okay, thank you both for a terrific briefing. Marcus Morris-Eiten there from AllianceBernstein and Bloomberg's Justina Lee. Now, just something that you need to watch out for. Airbnb shares of Airbnb have fallen sharply after a disappointing outlook for a third consecutive quarter, a warning of slowing demand for U.S. travelers. Now, Airbnb says it expects sequential moderation of growth in the key metric of nights and experiences booked in the current period. So you can see pre-market down 16%. Now, shares of Supermicro jumped as much as 18% after hours before falling sharply. Now, the company's quarterly revenue and profit missed estimates, outweighing its annual sales outlook that was billions above Wall Street projections. Investors worried about the long-term profitability of AI-optimized servers sold by companies like Supermicro and Dell. You can see Dell pre-market down almost 12%. Coming up, we'll take a closer look at Kamala Harris's choice for running mate and the Democrats' strategy in battleground states. That's next, and this is Bloomberg.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Welcome back, everyone. Now, Kamala Harris has formally introduced her running mate, Minnesota Governor Tim Walz, at a rally in Philadelphia. Now, Walz said Donald Trump would be a disaster for middle-class families if the former president is elected again in November.
Donald Trump's not fighting for you or your family. He never sat at that kitchen table like the one I grew up at, wondering how we were going to pay the bills. He sat at his country club up in Mar-a-Lago, wondering how he can cut taxes for his rich friends.
Well, Bloomberg senior investigations writer Stephanie Baker joins us now. I mean, it's got everyone talking, so there are basically two names in the running, and it's Walz, versus Shapiro, and Walz finally get it. What does he add to the ticket? And good morning, Stephanie.
Good morning. I think he adds a kind of rural, Midwestern appeal to the ticket. Obviously, she needed a white man to join the ticket to balance it out. Everyone thought she was going to go with Shapiro because Pennsylvania is a must-win state. There's no route, really, for her to win the presidency without winning Pennsylvania. But Walz came from behind. No one knew who he was. He had very little name recognition, even just a few weeks ago. And he has emerged as a very effective attack dog, taking on Trump policies in a kind of folksy manner. He exudes a kind of Midwestern dad vibe. And you saw last night, they're trying to position him as Coach Walz, playing on his history as a high school teacher, a football coach, his service in the National Guard. And, he's going to be playing defense, Coach Walz as defense for Kamala Harris, both online in social media as well as on TV.
Yeah, you mentioned social media. I think a lot of people didn't know him until a couple of weeks ago, actually, when he went on a TV show in the U.S. and just said, the Republican ticket was weird, and that went viral. So will he appeal to the youth, or does he really need to appeal to the swing states?
I think they hope he's going to appeal to those swing state voters that some of whom went to Trump before, that he has those rural roots and can speak to those voters in a way that maybe Josh Shapiro wouldn't be able to across a number of states, despite his popularity in Pennsylvania. I think he's got a real, as you say, appeal on social media. Some of his videos have really taken off. I mean, the risk is that weird comment. The Trump campaign is going to paint that as the equivalent of Hillary Clinton's deplorable. So, they need to be careful about how they use that word.
Stephanie, thank you so much. I mean, I could speak to you for 20 minutes on this. We'll have to get you back on. Our Bloomberg senior investigations writer, Stephanie Baker. Now, coming up, Novo Nordisk shares drop after the Wegovy maker cuts its profit forecast for the year. We talk to the chief executive next, and this is Bloomberg.
decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
DOJ or other authorities.
Could face bigger challenges.
Was going to keep reading World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome back, everyone. Now, Novo Nordisk shares are in the red after the maker of Wegovy lowered its profit forecast for the year. Europe's most valuable company also said revenue from its blockbuster weight loss drug was hit by higher than expected price concessions in the U.S. market. Well, we're delighted to be joined by Lars Frøyregaard Jorgensen. He's a Novo Nordisk chief executive. We welcome also listeners on Bloomberg Radio. Mr. Jorgensen, thank you so much for joining us. Look, your sales fell short of expectations, but your shares, frankly, were slammed, down almost 7%. Were you surprised with how big the market reaction was?
Yeah, thanks, Francine, for having me this morning. So I'll not comment on the share price development because that's in the eye of the beholder to do that. But I would say that when you look at our guidance for this year, we're actually upgrading guidance. We're adding 2 percentage points on the top line. And when you correct for a write-down and asset impairment on our operating profit, we're actually increasing operating profit guidance by 4%. So I think very robust guidance. But the second quarter is a quarter where Wegovy came in a bit short of consensus, and that's linked partly to some adjustments in how we accrue for rebates. So I would really urge investors to not just look at the quarter in isolation, but look at our confidence in the rest of the year and the upgrade we are bringing, because that's really a sign that we'll continue the trajectory we saw in first quarter in terms of achieving many more scripts in the U.S. market. We doubled the number of scripts in the U.S. market during the first 6 months. So we're confident in the outlook, but there are a few issues in the quarter to sort out.
So do you think actually what you've been hit by were one-off factors? And can you reassure the markets on that, or is it a bit too soon to say?
No, I think if you look at the development in the U.S. market, we started the year with a script count of around 100,000. We ended the first half year with doubling that, 200,000. And what we guide for is a continued, increase in that. So when you look at an individual quarter, you will have quarters where you have positive rebate adjustments, and you will have quarters where you have negative rebate adjustments. And this quarter was one where we had a negative impact on Wegovy, and that explains, I think, a good part of the shortage compared to consensus. So I'm confident in our ability to compete, to grow with Wegovy and also Ozempic in the U.S. And that's what is baked into our guidance increase for both top line and operating profits.
The Eli Lilly chief executive said last week that the shortage, of course, for their weight loss drug, Mounjaro, would soon be over. What do you anticipate the Wegovy shortage being over?
Well, we have also overnight removed the drug shortage notification for all but the starter dose. And we chose to keep it on the starter dose because that's really how we manage, a safe journey for patients. So when they start on a Novo Nordisk product, they can rest assured they can also titrate up to the high doses. So I'm really encouraged in our ability to scale to the US market to a degree where the FDA also accepts taking off the drug shortage notification. And again, look at the scripts and how we are serving more and more patients. That's really a sign of our underlying scaling of manufacturing and the fact that we can opt our guidance for the second half, where we have a tougher comparator from last year, is a sign of that continued scaling.
But when are you expecting the shortage for the starter doses to actually lift?
Well, we are supplying many more products. So you could say that we could also choose to remove that, but we have kept it because we think that there is a good sign of responsibility in terms of patient focus by actually in a dynamic way managing how many patients we start to make sure that all get a good experience. But we could also look at that if that's meaningful.
Just on the rebates, are you confident that they've actually hit rock bottom or have hit bottom in the U.S.?
So typically in the U.S. market, when you reach more and more patients and grow volumes, you do that on a lower price. For instance, we are broadening access in Medicaid. We have 20 states in the U.S. who now support use of Wegovy. And that typically comes at a lower price when you operate in the Medicaid segment. So when you expand your market access, you typically also give somewhat higher rebates. So that's a normal way of seeing a trajectory in the U.S. market. There's nothing special around that. And it's really to say that the financial guidance we give that should give investors a reassurance that there is an intact growth trajectory that we find very attractive also in the coming quarters and years, I would say.
Yeah. So the price of Ozempic and Wegovy has really, taken on a political issue in the U.S., and I think you're testifying before the Senate committee next month. So how do you anticipate the outcome of the U.S. election actually changing, your life in the U.S.?
Well, I think in parallel with the focus on the price of medicines, I think we're also building the case of stronger and stronger evidence for using it. So if you look at what Ozempic and Wegovy are bringing to patients, not only glucose regulation, weight loss, cardiovascular protection, kidney safety, we're also studying MASH, non-alcoholic fatty liver disease. We are looking at Alzheimer's, etc. So the body of evidence, you can say, becomes stronger and stronger, and the value of the medicine becomes stronger and stronger. And also, if you look at what is the cost to society of obesity, the estimates that makes that cost the U.S. society $1.7 trillion, around half a trillion direct link to cost in the healthcare system and also economic activity level. So this, I think, has to be factored in, but doesn't change the fact that the U.S. has a challenged healthcare system that we all need to contribute to and make sure the patients get access to the medicines.
But, sir, who do you think will be more amenable to those arguments? Is it President Trump or Vice President Harris?
Well, I think that's too early to tell. I think all politicians in the U.S. have a keen focus on the healthcare system because that's a key point for voters for good reasons. And I welcome the opportunity to testify in the Senate to explain our side of the story. I think there's been a lot of facts out there that could use a slightly different perspective, and I'll do that in September. And then I think it's really a story about collaborating to make sure that we together across different partakers in the industry work together and solve this challenge. It's not for one company in isolation to deal with.
You have a significant price premium to the rest of the pharma sector. Can you again give us an indication on how you see this developing? Do you think it's justified, given also those drugs' potential use to ease other risks, including heart disease?
Well, I'll let the market justify the price premium on our share. But if you look at, say, average growth in our sector, and then the growth that we are showing right now, growing 25% on the top line and increasing guidance for the year, I think that's clearly industry-leading growth. And I think that's because of our exposure to some very attractive disease areas and some great innovation, and also the pipeline coming and with great promise to sustain that growth in the future. So, that's what we focused on, getting to many more patients, scaling capacity, and build the strongest possible pipeline in these disease areas.
I also want to ask you, as a final question, when you look at some of all the concerns or actually talk about injected versus the injected version versus the pill, are you pursuing the pill or injected version of your compound in later stage trials?
So we're doing both. I think we have a very attractive pipeline in terms of injectable products on the market, but also a phase 3 readout of our next generation injectable coming later this year. But we also have, a very efficacious tablet-based treatment of semaglutide that is actually doing very well commercially in type 2 diabetes right now. We also have some exciting data there in obesity. And then we have perhaps a more scalable small molecule approach in an asset we acquired from Canadian Inversago a couple of years back, where we also get some phase 2 data later this year. So I think we have a very interesting portfolio where we can play in different segments with different, perhaps, say, efficacy and scalability points. But, I think it's a market where there's place for more competition. And I think what we have been doing has attracted a lot of competition, and I welcome that because this is our home turf, and I think we have the capabilities needed to stay strong in this very attractive market.
Lars, thank you so much for joining us today. It's really always a pleasure to speak to you. Lars Jorgensen there, the Novo Nordisk Chief Executive Officer. Now on to geopolitics, and the U.S. ambassador to the UK, Jane Hartley, says she hopes the U.S. is ready for the prospect of electing its first female president. Now, as a diplomat, Hartley says she is hatched, meaning she needs to adhere to the Hatch Act, which actually limits her contributions to any political campaign. Now, despite the restrictions, we had a wide-ranging and exclusive conversation about the upcoming U.S. election, relations with the new UK government, and the recent meeting between President Biden and Prime Minister Starmer in the White House.
There was a huge amount of warmth between the two of them. And a lot of talk about the special relationship, which I, of course, call now essential, because it is the UK that we look to in all of these crises that we are now facing. The Prime Minister had his Secretary of Defense and his Foreign Secretary with him, and we had Secretary Austin, Tony Blinken, obviously Jake Sullivan. And there was just a lot of appreciation going both ways about especially Ukraine and how well we had worked together and what our strategy was for the future. There was one touching moment, though, when President Biden looked at the Prime Minister and said, I know you and I know where you come from. And he said, I understand because I come from the same place. And really congratulated Keir Starmer on what he was trying to do, especially economically, in terms of lifting up the middle class in the UK, as President Biden has done in the US.
This was less than a month ago, and then everything's changed, actually, in the US presidential race.
Yeah, I think the Prime Minister was the last leader the President met with before he made his announcement that he wasn't going to run again.
And now we have a possibility of a female
Now we have a possibility. As you know, I think the President... Listen, I thought it was a great patriotic decision that Joe Biden made. And, as he always does, he put country first. And that's just who he is. But now, you're right, our vice president is the candidate. And from what I'm hearing on that side, the U.S. side of the aisle, a huge amount of excitement, a huge amount of passion, especially young people. And I talk to women all the time, both here and there, and people are really, excited that there may be the first female president. So I'm hatched, and I'm a diplomat, so I won't participate, but I will be watching closely.
I mean, there will probably be a lot of twists and turns in the next 4 months as we get to November 5th. What do you think the UK needs from the US right now?
What does the UK need? I think the UK needs what they will have and what they have had under the Biden administration, and they will have certainly, President Biden is still is still being president. I mean, we look at this, what he's just done in terms of hostages. It's not like he's changing. It's not like our Secretary of State or Bill Burns. Everybody is still working as hard as ever. The UK relationship is going to be as important as ever. We need, we've said before, the first call we always make is to the UK. When we were, the first attack from the Houthis, the first call we made was the UK. None of that will change. And it was clear in the meeting in the Oval Office. And it was interesting who was, Secretary Healy was there, and Secretary Lammy, Tony Blinken, obviously, Jake Sullivan, and Secretary Austin, and really talking how, even though there was a new government, there was going to be a continuity on what we're doing. So I think we'll see that throughout the fall.
Is the U.S. ready for a female president?
I would hope so. I'm here. I am the second female ambassador. And frankly, it's not a great track record, 2 in 200 years. But I'm hoping after me, there'll be many more. I think, listen, we remember 2016. And I remember my daughter and many other young women I know just sobbing that night and that morning. I think we have come a long way, and I mean, just look at the Congress also on both sides of the aisle. Right, frankly, I mean, I just had a delegation here that was more from the Republican side of the aisle, but huge number of women, and interesting, armed services, intelligence. So some of the more important committees. I think we're ready, and I hope as we look to the future, we can tell our children that they can aspire to whatever they want. That it's only their dreams that are holding them back. And having a female president could be very important. Here, as I say, I'm the second ambassador, but I always tease Carrie Russell of The Diplomat to say that she's probably having more influence on women going into the Foreign Service than I am. But it is important. Young girls need to see, everybody knows they need mentors, but they also need somebody who looks like them that they can aspire to.
Ambassador, when you look at the changes in policy, whether Donald Trump gets into the White House or Kamala Harris, it's going to be different for the UK and Europe on security. It'll be different on trade.
Well, listen, on security, and once again, I can't and I won't and I wouldn't be knowledgeable to comment on Donald Trump's policies. I think we know how important multilateralism and how important the allies are to President Biden. For years, remember, he headed up the Foreign Relations Committee, and the first thing he did when he came into office was come over to talk to the allies. We see what he's done and what we've all done, but what's happened to NATO in terms of the expansion of NATO and the strengthening of NATO. And I think as we look around the world, look at Ukraine, for instance. Look even at this last hostage deal that just happened. That happened because of our allies. I mean, we were obviously kind of the point person, but it happened because of our allies. You can't do these things without allied support. And I think in Europe what's happening is not only is NATO being strengthened, but people are re-looking at how much money goes to defense. And I think that's a real positive, real positive.
Ambassador, how do you see the world changing? It feels like there are blocks, there are changes, the news flow is far greater than it's ever been.
Well, as you get, every morning when you get up, there's something new that's happening. I mean, I think it's important to realize, and this is why the UK is so important, that we have shared values. We have shared values of democracy, freedom of speech, and all of us, the UK being number one, have to work together because we also see on the opposite side of that autocrats getting together. We see what's happened with Russia in terms of Russia's invasion of the Ukraine. We see how China is now helping Russia in terms of its invasion in Ukraine. We see North Korea getting involved. So I think those of us that come from a place of freedom, democracy, rule of law, very important, have to start working together, thinking together, and working strategically because those on the other side are starting to do that.
So the chancellor, the first female chancellor actually the UK has ever had, is also in North America right now.
Yes, I know.
Looking for investments to come back to the UK. You were instrumental in understanding some of the big American companies wanting to invest here in Great Britain. Will that continue?
Oh, I think so. Yeah, I'm thrilled she's there. I think she's in my hometown, New York City. She's probably meeting with some of my friends as we speak. I think it will continue. I mean, it's a little bit what we talked about before. The UK is an important investment place, partly because it's a country that shares our values. And I think as a CEO, I've had many CEOs come through here, and one of them, interestingly, explained to me, he said to me, I said, where are you investing? He said, I'm investing in the UK. And I said, why? And he said, let's think about it. I said, okay. He said, rule of law, number one. Rule of law, really, really important. Entrepreneurial people, great education system, transparency, financial transparency. And he went on because there are many more assets too. But English speaking, I guess, would be one. But he said, where else would you invest? So I think there is a huge opportunity here. I've always thought that, to be honest with you. And I'm thrilled she's in the U.S. because the U.S. companies I know that have come here are excited to come here and are looking, I think, to do more. And I think some of the new policies that Labor has in terms of, especially in terms of climate, in terms of the public-private investment piece of that, could be really exciting.
Have the riots actually shaken up, you think, the investor community? There's questions about what this means for the UK going forward.
Yeah, I mean, no, I don't think so. I think they're too scattered, too small right now to have an investment, to have an effect on major investment decisions. I do think they're sad, personally, and I do think I agree with what Keir Starmer said and what Yvette Cooper said. I think if this is thuggery, which in some cases it looks like, it does have to be punished. It does have to be punished. I mean, where I think it has the biggest effect, which is sad, I've traveled all over the UK in these beautiful communities with wonderful people and so friendly. And you look at these communities, and it's their communities that are being destroyed. It's their storefronts, it's their transportation, it's taxis, it's whatever. So in those communities, yes, it's really hurting the economy. So I do think what the Labour government is doing is right.
Well, that was our exclusive conversation with the U.S. ambassador to the UK, Jane Hartley. Now, staying with the UK, riots and police forces have deployed extra officers and say they're ready to arrest hundreds more of far-right activists. This after plans circulated online to coverage on immigration centers later this evening. Now, the recent disorder has been fueled by online misinformation after false claims about an attacker who killed 3 young girls in northwest England last week. Coming up, Hamas names a new leader. We'll look at what Yahya Sinwar's appointment actually means for the war in Gaza. That's next, and this is Bloomberg.
volatility of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Well, Hamas has named Yahya Sinwar, the alleged mastermind of the group's October 7th assault on Israel, as its new political leader. Now, the choice sends a message of defiance to Israel and the U.S. and is seen as a blow to efforts to broker a ceasefire. Well, joining us now is Bloomberg Horizon's Middle East and Africa anchor Jumana Bersecha. Jumana, good morning. So what does Sinwar's appointment actually mean for Hamas and the ceasefire negotiations?
Well, certainly an act of defiance, as you say, Francine. Ever since the assassination of Ismail Haniyeh a week ago, there's been a lot of speculation as to who is going to take over from him. Some people thought it might be his deputy or at least somebody situated in Doha. In the end, they went for Yahya Sinwar, who is thought to be one of the most hardliner, radicalized members of Hamas. He is currently residing in Gaza and is thought to be one of the masterminds behind the October 7 attack, also designated a global terrorist by the United States since 2015. And so there are lots of questions as to what this means about the future of those ceasefire discussions. U.S. Secretary of State Antony Blinken has already commented on his appointment, saying Sinwar has been and remains the primary decider when it comes to concluding the ceasefire. It really is on him. And so this, of course, is coming at a crucial time for the region. Israel is on alert for that forthcoming retaliation that Iran and its proxies have talked about in response to the twin assassinations last week. And indeed, yesterday, we heard from the Hezbollah chief, Hassan Nasrallah. He gave another speech 1 hour long, saying that that retaliation will still be forthcoming to seek revenge for the killing of Fa'ad Shukr, the Hezbollah second in command. And he said that Hezbollah are willing to do it alone or with allies, suggesting that it wouldn't just be a single front if there is a retaliation, but it could come from Iran's various proxies in the region, be they the Houthis in Yemen, Iran itself, and Hezbollah, of course. And then one final comment that also is interesting that Hezbollah put out yesterday is saying that Israel waiting for the response is part of the retaliation efforts in itself. And so the fact that the whole region is on tenterhooks is part of their retaliation, as Hassan Nasrallah would put it.
Jumana, thank you so much. Jumana Bersecha there in Dubai. Now, coming up, we'll have plenty more on markets. The BOJ moves to calm investors. We take a closer look at what this means for the carry trade. That's next, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Well, the Goldman Sachs chief executive, David Solomon, says he does not expect the Fed to take any emergency steps after the recent market volatility. Well, he sat down with David Rubenstein in the latest episode of Peer-to-Peer Conversations.
I think there are a couple of things that have gone on over the last couple of days that contributed to the market volatility, we've seen really since Friday. The first is the jobs report on Friday indicated a slightly softer trajectory for the U.S. economy than people were expecting. I think it's important to pull back at a high level and just recognize it wasn't a horrible job report. It was just softer than people were expecting. And employment levels still remain pretty robust. But it certainly took market participants by surprise, is what I would say. And market participants have been well levered toward a very soft landing. And I think they now discount that soft landing a little bit more than they did prior to this one reading. The second thing that happened is the Bank of Japan tightened rates, tightened monetary policy for the first time in a long time. Money has been very, very easy in Japan, and investors around the world have basically been borrowing in yen and investing in U.S. Treasuries and getting a nice carry on that trade. And based on the Bank of Japan's movement, a bunch of investors began to unwind those trades. There were a couple other things that went on in the margin. I think there were a couple of investors that were positioned the wrong way versus volatility, and that had to be unwound, and you saw a very, very significant spike in the VIX, probably the single largest one-day move we had ever seen in the VIX. So all that created a little bit more market uncertainty and a little bit of volatility. But I wouldn't call it extraordinary by any means. I do think that we're getting a correction here after a very strong run in the markets, and that might be healthy. In terms of your question about a recession, our economists have upped their chance of a recession to 25% from 15%. All of that I think is a little lower than the broad consensus. My view is that the best chance as we look forward is, the economy will chug along and we probably won't see a recession, but the possibility is not zero. It's never zero.
Well, you can watch more from that interview with the Goldman Sachs chief executive on the David Rubenstein Show, Peer-to-Peer Conversations, next week. Now, the yen has weakened after the Bank of Japan has sent the strong dovish signal in the wake of Monday's stock rout. Let's take a closer look at the carry trade with the M-Life strategist, Ven Ram, the one and only, I should say, Ven Ram. Ven, great to speak to you. So are we actually done with the unwinding of this carry trade?
Morning, Francine. I think that, this is going to occur in fits and starts. We are not fully done yet because JP Morgan estimates that, only 50% of the carry trade has been unwound. So I think that this is destiny postponed, destiny deferred, not completely disrupted. Now, I think, as I said, this is going to happen in fits and starts. So I think in the coming weeks, we could see periodically, if you look at the 2008, 2009 financial crisis, the markets didn't fall all at once. It happened sporadically, and that is the typical pattern of how markets behave. So I think that, you know, we should expect more volatility in the coming weeks because it's becoming increasingly clear that the Fed will have to cut rates at some point, and September is looking very likely. And as the Fed embarks on rate cuts, I think these carry trades will be increasingly called into question. So that is going to be an ongoing feature of the markets in the coming months.
So what do the BOJ Deputy Governor's comments actually mean for the Fed's trajectory, then?
I think that the markets are kind of thinking that, you know, the Fed is going to throw the whole lot at the markets. I mean, they're expecting 100 basis points of rate cuts by the end of the year, which I think is a bit of a stretch. I think that the Fed does want to cut rates here, because if you look at core PCE, we are averaging almost 2.6%, which is where the Fed wants it to be. If you juxtapose the Fed funds rate against that, I mean, the real policy rate works out to upwards of 250 basis points, which is extraordinarily restrictive. So the Fed is going to come out and cut rates in September, albeit I think they are going to go at a 25 basis point pace. So 25 basis points in September, 25 basis points possibly in December. So that only adds up to 50 basis points, not the 100 basis points that the markets think will likely happen this year.
Ven, what does it mean? I mean, going forward, I don't know how you lived the last couple of days. Is it something tangible that's changed, or is it just a confluence of, panic events all happening at once?
I think that, this was an accident waiting to happen, because the Bank of Japan was kind of unusually hawkish at the last meeting. And I think that, it was fairly clear that given the path of real wages in Japan, the Bank of Japan was going to have to raise rates. And, those rates aren't going to be at zero for a long time, and they've moved higher, and the Fed funds rate is going to go lower. So I think that increasingly the markets are going to call into question this carry trade. So it was an accident waiting to happen.
Interesting. Thank you, Ven Ram there from Bloomberg MLive. Now, these are some of the movers that, of course, we're watching out for in Europe. Novo shares plummeting as sales of its blockbuster weight loss treatment Wegovy disappointing investors in a rare misstep for the high-flying drug maker. I'm also looking at Glencore deciding to retain its coal and carbon steel materials business. Coming up, we have Bloomberg Brief with Manus Cranny in New York, and this is Bloomberg.
Connection lost.
We've invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and your work. I know I deal with that all the time. This is really a people-first company. Even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price-wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that, this is something that, many business leaders are focused on, and, time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at a 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could We've always taken what we should. We have to pay people more. We have been and will continue to do so. We'll take a little bit of a margin compression on that as we've had to, and I think that's the right thing so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Good morning from our global headquarters in New York. I'm Menace Craney. You're welcome to Bloomberg Brief. Let's set your agenda. Air cover from the Bank of Japan, a pledge to refrain from hiking interest rates when the markets are unsteady. The stock rally endures, volatility subsides, hedge funds and institutional money buy in size. And the Democratic ticket is set. Vice President Harris picks Minnesota Governor Tim Walz as her running mate to block Donald Trump from returning to the White House. A very good morning to you. So the soothsayer message has arrived from the Bank of Japan, which is that they are on pause. That air cover has invigorated the pro-risk stance on a global basis. Equities are higher in the United States of America. You've got dollar-yen, as you can see there, dollar moving higher by 2%. More on that in just a moment. But the flow of money is very clear. Goldman Sachs say that hedge funds have reversed their tech unwind. They were the most underweight in 10 years. The hedgies are calling in from the Hamptons and loading up and looking large when it comes to the tech position. Russell up 1.65%. JP Morgan say $14 billion worth of institutional money played into this market on Monday alone. Airbnb, you're not traveling. The reality is something different in the real economy, and we will debate over the rate cut narratives for the Fed. Look at that Airbnb down 16%. There are signs of slowing demand, and this is the critical issue from McDonald's through to Nestle, through to Heineken. The reality of the consumer on a global basis is changing. Let's get straight to the Asian session. I give you a complexion of what's gone on. As I say, Bank of Japan's Uchida calls for a pause. We won't raise rates until when the market is unstable. We need to qualify what stability is. We've moved by 5 big figures in dollar-yen, 141.70 to 147.15. So we've moved even more than that. Again, re-establishing some of the wealth within Japan after a $1.1 trillion wipeout. That's the Nikkei, up 1 1/8% this morning. 10-year government bonds. This is interesting. We're rethinking the rethink from BMO. The rate cut narrative in the United States of America has got slashed aggressively from 5.5 cuts, in other words, 150 basis points to where we are at around 100. We didn't even see that in 2007. It's going to be tougher perhaps to get the 10-year and the 30-year bonds away. But let me take you to the thinking in the market. This is from UBS, from the chief economist, from Paul Donovan. It's a lesson for you all. Central banks are not supposed to create disorderly markets. I think we can review that. So this is not necessarily surprising that the last rate hike will not be reversed. From the Bank of Japan, this is. The political pressure on the Bank of Japan to raise rates was not properly backed by the economic fundamentals. There is a lesson there for all central banks when it comes to the chiding of cuts, when it comes for the calls for hikes. My guest this morning is timely on the FX markets. Valentin Marinov, head of G10 FX research at Crédit Agricole. Valentin, good to have you with me. My question to you is simple. Has the Bank of Japan capitulated to real pressure of volatility, but delivered the air cover to slow the carry unwind? Good morning.
Good morning, Manus. Well, indeed. I mean, you could say it's the case that the BOJ will be proceeding much more cautiously from here, especially given the political backlash you alluded to that became apparent already yesterday. And as a result, as you said, a collective sigh of relief across the markets. Carry trades or yen-funded carry trades are back in vogue. It could be it is a possibility that in the very near term, some investors will be tempted to dip their toe back into yen-funded carry trades. I personally think dollar-yen could be heading closer towards 150, yet again on the back of those developments. That being said, I think that the best days of carry trades are truly behind us, and I do believe that we have seen the lows in yen. So from that point of view, whereas in the interim we may see the yen depreciating a bit or carry trades coming back in vogue, I think the ultimate direction of travel would be further unwinding of carry trades from here.
Okay, so you'd have to be fairly brave, Valentin, I'd say, to jump in and do new carry trades. Okay, what qualifies stability for the Bank of Japan? Because that's critically important, and that will define whether they can hike again. 30% probability for October. That is what the OIS swaps markets say. That is not a consensus to hike. So in your mind, what qualifies stability for the BOJ?
Well, I do believe they'll be looking at both FX and potentially Nikkei volatility there. I mean, it is an open question as which particular measure they will be looking as a whole, but at least my interaction with them has suggested that annual changes for them are indeed of quite significant, especially when it comes to the FX markets. So presumably, if indeed that volatility dies down from here, that may give them some comfort and indeed pave the way towards the next hike on their side. I do believe also that in reference to what you mentioned earlier regarding fundamentals, Japanese wages are indeed accelerating. Real wages turned positive, or real wage growth turned positive more recently. And I think that in and of itself certainly argues for further policy normalization. I don't think that financial market instability will derail BOJ's progress towards normalization. It will slow it down, though. So therefore, I believe in terms of horizon, 6 to 12 months, maybe your target when it comes to really dollar-yen, really, or in particular the Japanese yen, appreciating more meaningfully in response to more meaningful policy normalization. In the next 3 to 6 months, I think the financial instability concern may slow down the process of policy normalization quite significantly.
On a 3 to 6 month horizon, then, am I sort of from a market perspective blocked at 140? Is there a big psychological blocker at 140? If that dam gives, that is another wave of carry unwind.
Well, in terms of levels, you would think that 140 may be indeed the level on the downside for dollar-yen, where essentially the yen rally would stop. And I guess from here into year-end, I would think that we're going to have those bouts of yen selling, yen buying from here. And obviously, having experienced what happened really in recent weeks, it is clear that financial stability considerations will remain an important driver of BOJ's policy from here. And that, I have to say, should count really against the yen for the time being. And therefore, I believe for real further gains and long-term fair value for dollar-yen is anywhere between 110, 120, really those levels. I don't think we will reach those levels before mid of next year or indeed end of 2025 as a result.
Okay, so that's a long distance call out into the back of 2025. Near term, what the Fed have to deal with is this. We saw a market go parabolic in terms of rates pricing, 5.5 rate cuts, 150 basis points. They only did that in 2001, heading into a recession. In 2005, I was chatting to one of our guests on the IB. In 2007, they did 50, 25, and 25. So when you look at the cadence of cutting from the Federal Reserve, I just called out Airbnb. The stock is down 15%. Idiosyncratic information from the real economy is something different to the GDP trackers that we've got from yesterday, etc. The Atlanta Fed GDP tracker saying a very healthy number. So with this repricing, the volatile repricing in rates, do you think 50 basis points is appropriate in September?
Well, I mean, it is a possibility, and one reason for that would be the fact that the November Fed meeting will essentially coincide with the US presidential elections. But beyond that, I think that the repricing of aggressive Fed rate cuts is likely to continue. I personally don't think that the Fed is going to cut 4 times this year, as implied by the markets, really at the moment at least. It is the case that the US data has shown some weakness and is expected to signal further slowing of the economy. But I think the Fed will want to take it a bit more slowly, especially given that while weaker inflation remains uncomfortably high. And I guess I should also mention something that people are forgetting altogether, the experience we had from last year when we had a number of US banks really failing, and that's certainly sending shockwaves across the markets. The Fed did not pause its tightening cycle. It did not cut rates. Instead, they pumped in more liquidity. People are forgetting that the Fed has a number of tools at its disposal to deal with financial market turbulence. And rate cuts may not be the preferred tool just yet, just because inflation is too high and indeed the economy is sufficiently resilient. And this is partly behind the, I would say, bullish dollar-yen call from current levels in the near term. It is the case that even if the Fed were to cut rates in September, I do not think that this is going to be accompanied by forward guidance suggesting that an aggressive easing cycle is underway.
Okay, I'm seeing messages come through to me here, which is sell the you cheetah bounce. Okay, Valentin, thank you very much. It's going to be a frisky market, certainly between now and the end of the year. Valentin Mariner, the off-credit agricole. There are other stories apart from the Bank of Japan on your Bloomberg terminal this morning. Let's kick it off with some corporate news. SoftBank announces a buyback worth $3.4 billion to bolster its stock price after a month of sharp sell-offs. The move comes after pressure from its activist investor, Elliott Investment, which built a sizable stake in SoftBank this year. Glencore has abandoned its plans to spin off its coal unit. The decision comes following discussions with shareholders who pushed back against the move. Glencore's coal business is one of the most profitable units, driving record returns in recent years. Growth of China's exports unexpectedly slowed in July, signaling the cooling of global demand. Domestic consumers are also spending less. Meantime, China's imports rose, driven by chip equipment orders ahead of a potential U.S. curb. Coming up, Politics Matter. Minnesota Governor Tim Walz will be the Democratic ticket. We'll examine just what he brings to the Harris campaign. And later in the hour, I catch up with Kevin Mann, President, CIO of Hennian and Walsh Asset Management, about the Fed's rate path. Context matters every day on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Earnings season is here.
You're seeing back-to-back billion-dollar-plus quarters.
The forward indicators were so positive.
Bloomberg is first to break the numbers.
Texas Instruments out, folks.
Goldman Sachs taking a look at Mattel.
There is something for everybody.
With the smartest insights.
People are whitewashing AI.
Wallets are under pressure.
We are committed to EVs. They're going to happen.
Earnings season in full swing.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
Donald Trump's not fighting for you or your family. He never sat at that kitchen table like the one I grew up at, wondering how we were going to pay the bills. He sat at his country club up in Mar-a-Lago, wondering how he can cut taxes for his rich friends.
That was Minnesota Governor Tim Walz speaking at a rally in Philadelphia yesterday after being officially named as the Vice President Kamala Harris's running mate. Our chief political correspondent, Amory Horder, and I don't think she's had any sleep for the past month. Good to see you. So this is her running mate, and yet you sent me a poll that says 70% of America don't know and haven't heard of Mr. Walz.
Yes, so this new poll by Marist was done before he was tapped as the running mate. But it's true, he has to really reintroduce himself, not just to Minnesota, where he is well known, but as a VP candidate, but now to the nation, to the rest of the world. Very unknown, the dark horse candidate in this Veep stakes, and he was chosen. And I think the Wall Street Journal editorial board put it well today when they led with Trump doubled down on his base with picking J.D. Vance. And you do see Kamala Harris doubling down on the progressives and her base by picking Tim Walz, the governor of Minnesota.
I mean, you just look at some of the tweets from the progressive side, and specifically we're talking about Alexandria Ocasio-Cortez. Govern effectively, inclusively, boldly, calling his addition to the ticket an excellent decision. Give me a sense as an outsider, the size and the heft of the progressives and how important it is to bring them more on side, because Biden had tried, but perhaps maybe not as effectively as this ticket.
Well, I think potentially what both parties are trying to do is turn out their bases and run up the numbers on their bases. Something you get from Tim Walz is Minnesota is already blue, but potentially he can speak to those individuals in the Rust Belt, in Michigan, in Wisconsin, something that Governor Shapiro would have definitely been able to do as the governor of Pennsylvania, but they decided to go with this individual. He has an arc when it comes to policy. He was in the House for 12 years, and he was definitely more of a moderate in the House. And as governor, he's definitely mean policy-wise towards more progressives. You're going to see criticism and some concern from conservatives when it comes to things like gender-affirming care in Minnesota. They're going to be a lot of criticism about how he responded with the upheaval on the streets after the killing of George Floyd in 2020. Many said he wasn't quick enough to bring in the National Guard. So these are going to be the pressure points. But at the end of the day, yesterday there was a lot of excitement in that room. The same way there's a tremendous amount of excitement after Donald Trump spoke at the RNC, after that assassination attempt on his life. There's a tremendous amount of excitement from the base in that room, which Biden wasn't getting. Now this is a fresh new ticket, and they have a shortened time span to get out there, and potentially that's going to work in their favor.
I mean, speaking about that convention yesterday, at one juncture during the speech, he talked about Trump being a convicted criminal. And of course, this goes back to the chance of the Republican Party, lock her up. Of course, they were chanting, lock him up. Again, this is a reinvigoration, as you say, of a political base. Is this going to be a very, very different campaign to the one under Biden in terms of using, we've seen a lot more social media, a lot more live event. What's going to shift here? Are they going to run in parallel? Are they going to be joined at the hip? Or what are we going to see from this campaign?
So the next week, this upcoming week, you're going to see them join at the hip. They're going to hit up all the hot spots. around the country. They started out in Philadelphia. Pennsylvania is basically the Florida for Republicans, what it is for Democrats. It is must win. And you see there, Trump has made a tremendous amount of inroads, and it's a state he won in 2016. So they kicked off there, a little bit awkward for Governor Shapiro, who got the shrug. But they're going to be hand in hand. And then they're basically going to say, we need you in the Midwest. He's going to be countering J.D. Vance. I think something also that's different from this group is already you can see the excitement with the Gen Z generation on TikTok, something Biden wasn't bringing in.
Okay, got the shrug. There's the phrase of the day, got the shrug. But is Shapiro got it? Has he got broad shoulders to be politically useful? Anne-Marie Jourdain with the very latest on the Washington moves. Coming up on the show, I'll take you through all the other major headlines making news around the world. Novo Nordisk also sees a worse setback. The stock is down 3 1/8. We'll take a look at what's weighing on the stock. Context matters every day on Bloomberg from New York. Good morning.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
Second quarter is a quarter where we came in a bit short of consensus, and that's linked partly to some adjustments in how we accrue for rebates. So I would really urge investors to not just look at the quarter in isolation, but look at our confidence in the rest of the year and the upgrade we are bringing.
That was the Novo Nordisk CEO there speaking to Bloomberg a little bit earlier. The shares dropped this morning. The Danish drug maker reporting softer than expected sales for the weight loss drug Wegovy. Here with a little bit more detail is Sana Vase, who has the key takeaways on these results. I mean, this is a slight moment of humble pie, because Wegovy, Ozempic, both underwhelming, and the guidance as well. So is this a moment of a stumble or something more?
I mean, certainly there is some doubts creeping into the market, but interestingly enough, Novo actually increased its sales of these blockbuster drugs, Ozempic and Wegovy, and it also raised its sales forecast for the year. But it just didn't seem to be enough for the investors, and that's why we're seeing the share price down today. Novo missed estimates on Wegovy sales and Ozempic sales, and it also went out to say that it would continue to restrict sales of Wegovy starter doses in the US. So there seems to be still some way to go for the company to really meet that demand that there is out there. And of course, Novo also lowered its profit estimates, or profit forecast for the year, which really also shows that Novo is facing some bumps in the road, and this past quarter it had to take quite a big impairment charge due to a failed study of an experimental heart drug, and so of course that's also a drag on profits and impacted the forecast.
Look, this is just one of those days when management have got to stand up. They've got a bump in the road. They haven't had this so far. It's been all hail, all glory, you know, Ozempic, pens are us. But in terms of the trajectory, you've got the bullish side, which is the CEO says, we're in the early days of saturating the US market. But where is the competition on that? Is that what investors are most frightened of here in the United States of America?
I think investors are generally concerned of any little news that could potentially challenge Novo on this growth journey that it's on. We have seen also growing competition from Eli Lilly, which now has a product on the market, and also other pharmaceutical companies that are now starting to or exploring weight loss drugs. Swiss pharmaceutical company Roche has now advanced a trial of a weight loss pill. But anything, investors are of course looking at any little news that could challenge Novo, because yeah, as you say, there has really just been a Novo mania lately. In the past year alone, Novo shares have risen 60%. So any little thing that could challenge that, investors are getting concerned.
Okay, Sana, thank you so much. As you say, a bump in the road for today, Sana Vase, there on the Novo Nordisk numbers. We're going to dig into some of the equity markets and whether you can trust this rally. But let me leave you with a snapshot of where we are right now. The Bank of Japan delivers verbal coverage for a pause in the unwind. That has delivered a little bit of a bid to the equity markets. Let's have a look at some of the equity markets in terms of where we are. U.S. equity futures are just a little bit higher at the moment. We are up on the Nasdaq by 1.3%, and S&P 500 up over 1%. Kevin Mann joins me shortly.
What would you say somebody young who's watching this should do if he or she aspires to be like you?
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Be a focus on being a phenomenal communicator, invest in that. Think about it. We have to convince a company to sell to us. You just don't walk in and buy the stock or tell them, yeah, you're for sale, I'll pay you this price. That takes years of relationship and effort. Why would somebody sell you that billion-dollar software company growing at 20%? Just because? No way. People hang on to these great assets. And then how do you get on the same page with the executive team of that company, even if they're existing or new? It requires just amazing communication.
If you go to a cocktail party and somebody comes up to you and says, I have $100,000 I'd like to invest, what do you would recommend that person do with $100,000? What do you think is a good idea to do with $100,000 today?
Sometimes they do, and I give them the most boring answer ever, S&P 500.
Just buy an index.
Buy the index. You don't have to worry about the quarterly earnings of a company. Did something change? Did somebody change management? You don't have to make this your full-time job. Just buy the index and you're going to be okay.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Global headquarters in New York. I'm Menace Cranny. Let's set your agenda. A cover arrives from the Bank of Japan, a pledge to refrain from hiking interest rates when markets are unsteady. The stock rally endures, volatility subsides, hedge funds and institutional money arrive and buy in size. The Democratic ticket is set. Vice President Harris picks Minnesota Governor Tim Walz as her running mate to block Donald Trump from returning to the White House. The cavalry have arrived and stocks are rallying. The Bank of Japan has been pressured into a verbal retreat. Not a change in rates, but a soothsaying message. The Bank of Japan's Uchida says, we're on pause. We're not going to hike. We're not going to move. We're going to stay as we are until we see stability in markets. That has invoked a risk-on narrative. We see a carry-through on the equity side. Is it that the Bank of Japan has delivered air cover, or is there something more substantial? Goldman Sachs say the flow is here. The hedge funds are calling in from the Hamptons. They were the most underweight in tech in 10 years, and they have begun to buy. Single-name buying, according to Goldman Sachs, was the most net buying since March. JP Morgan say $14 billion of institutional money arrived in. Dollar-yen is the ground zero for risk on. That is the dollar up, the yen down by over 2%. Valentin Marinov of Credit Agricole says, look, this run over the next 6 to 12 months will be volatile. You're not going to get to 110, 120 until the end of 2025. Airbnb getting crushed this morning. You need to get out there and travel. The signs of slowing demand. This is, again, another message from the real economy about what's going on. To the bond market and to the Japan session. The bond market, as you can see, is trading at 393. We were over 4% on the very short end of the curve. Tens have moved up by 10 basis points yesterday. The message from the Bank of Japan, Uchida, is pause. We've moved by 5 big figures on dollar-yen after a $1.1 trillion stock meltdown in Japan. That is called wealth destruction. The single biggest 3-day move since 1959 on the topics and 1970 on the Nikkei. So we are looking for a more orderly unwind of the carry trade. You will get a little bit of auction in this market today, 10s and 30s. The 3 years went fine yesterday. So where are we on the great unwind and the jolting of risk and equity markets? Well, the Goldman Sachs CEO, David Solomon, sat down with David Rubenstein on whether we see more volatility in the future.
I think we're going to see more volatility in the short term here. This was a pretty big, pretty meaningful correction and a big unwind of leverage, as we have discussed, in certain parts of the system. My guess is we'll see a little bit more rebalancing. But my base case is still that there's a good chance the economy is still in reasonable shape.
Well, Kevin Mann is the president and CIO of Hennian and Walsh Asset Management. He joins you now around the desk. Look, David Solomon, many people have seen many huge volatility periods. Here we are. Solomon says it was sort of like a healthy moment. I sort of challenge that. There was nothing healthy about the moves in the bond market that I saw on Friday and Monday. There was nothing healthy about that.
Yes.
I understand the principle that it may provide an opportunity, but how healthy an unwind has this been?
Yeah, I've been doing this for over 3 decades now, and investors never appreciate when we see significant market pullbacks like that over a short period of time. But let's look at the reasons why this particular pullback occurred. In your earlier segment, you touched upon one of them, the Bank of Japan surprising with that upward move in interest rates, which caused this global reversal of the yen carry trade. That unwind isn't done just yet. Second factor, last week, the Fed didn't actually lower interest rates as some, such as myself, were expecting, and taking a slightly more hawkish turn. And the third biggest factor, of course, was that July jobs report. It reminded everyone that perhaps the economy isn't as good of a footing as many earlier expected.
But let's put context around this. The yen drops by 2%, the dollar rallies by 2%. This is, as I framed it, as air cover to try and just quell the speed of the carry unwind. But you would still say there's another leg to go in that unwind, and that these rallies in dollar or this drop in yen, whichever way around you want to look at it, it is perhaps an opportunity for more divestment rather than taking more risk.
Yeah, absolutely. And I think the yen carry trade is just one small part of the overall equation. The bigger part is the job story. We saw unemployment rise to 4.3%. The Fed, as of their summary of economic projections in June, were only expecting to end the year at 4.1%. We've already blown through that. So will the Fed be late to the party once again? Are those 3 rate cuts back on the table? Or perhaps are we now going to see a 50 basis point cut in September? All that creates uncertainty. All that will create more short-term bouts of volatility. But I do think with that volatility comes opportunity away from, but not necessarily abandoning, those large cap growth technology stocks.
I'll come to that in a moment. We caught up with Claudia Sam on Monday, Jonathan, along with Danny. Her point to the market was calm is important.
Yes.
We are uncomfortably close to a recession. So this is about slowing the momentum, slowing the drop. Right. So this is about slowing the drop. To slow the drop, the market convulsed and went 5.5 cuts. We're back to 3. We're back to 3, maybe 4 cuts is where we are at the moment. What slows the drop in your mind and puts a floor under risk?
Earnings.
Okay.
Earnings have always driven the market, and over the course of the last 12 months, 83% of the earnings growth in the S&P 500 have come from those magnificent 7 technology stocks. We need the other 493 stocks to start significantly growing their earnings as well. Fortunately, they are forecasted to catch up to the Mag 7 by the end of next year, going into the first quarter of 2025. So I think that creates the opportunity for investors to diversify, not abandon the Mag 7 stocks, but look to other areas of the market. How about international stocks, municipal bonds, some of those unloved sectors like utilities, consumer staples, healthcare. Those are areas where we see growth potential, and also they're trading at much more attractive valuations than technology right now.
So you're still not concerned about a global growth scare. Let's just square that away for now, because we vaulted from huge growth scare to Goldilocks just got some toxic porridge. So where do you sit?
I've seen that growth scare since the first quarter of this year. Actually, we saw GDP coming at just 1.3%. We've now seen unemployment rise to 4.3%. We know the total amount of household debt outstanding in our country and the early delinquencies starting to take place in credit card payments. That's so important for the U.S. economy because the consumer accounts for 70% of our GDP growth. However, the Fed is aware of this. They're more concerned with this slowdown than they are with inflation staying above 2%.
Well, here's the thing. I mean, by the way, this came from Torsten Slog. This is the default rate is actually declining. So again, this perhaps detracts from the really hard landing narrative that we convulsed about on Monday, doesn't it?
It does, but the soft landing is still in question to me, and it is still in play with the Federal Reserve.
So I would say that soft landing is even more in question. I look at, so I've got the Atlanta Fed GDP tracker at 2.9%. You go, okay, that looks pretty solid.
Very solid.
Okay.
Compared to first quarter, without a doubt.
I see you and raise you. Nike, Delta, Airbnb, you got to get out there and get on your holidays. But on a slightly less frivolous way, Nike are warning, Delta are warning, Heineken are warning about the US consumer, and Airbnb are saying, what is it they say? There are signs of a slowing demand. I would say I listen more to what the CEOs and the forward guidance is from Nike, Delta, and Airbnb than perhaps some of the other data.
Yeah, I would suggest that second quarter earnings have been strong. We've seen year-over-year earnings growth, the highest it's been since the fourth quarter of 2021. But we've also seen now 39 companies issue negative EPS estimates for the third quarter. So all of these companies, not all of them, a lot of them are suggesting that the U.S. consumer is becoming more frugal, more value-oriented. If they become more frugal and value-oriented, that suggests to me they're going to spend less. If they spend less, the economy slows further, and the Fed's going to have to step in and cut interest rates to help stimulate demand as opposed to dampen demand as they've been doing over the last year and a half.
How brave have you been? I've had a number of calls and emails. I need to call somebody back today, which is about dollar averaging. But again, on a slightly more serious note, institutions have been brave. $14 billion worth of equities were bought, according to JP Morgan. Goldman Sachs has said very clearly, the hedge funds are calling in from the Hamptons. I mean, they were the most underweight tech that they've been in 10 years, and they flipped.
Yes.
So how brave should I be? Should I follow that institutional narrative, or is that opportunity done? Is this a short-term trading range that these boys and girls are jumping into?
Yes, at Hennion & Walsh, we always remind our clients, what's more important isn't trying to time the market, which we all know is an exercise in futility, but it's time in the market.
It'd be nice to get it right sometimes, though, wouldn't it?
In fact, though, we looked at a study over 31 years, and what we found was that 95% of the gains in the stock market come on just 1% of the trading days. Now, I don't know when those 1% of the trading days are going to be, but I can assure you this, Manny, if you're not in the markets on the 1% of those trading days, you can't participate in the most significant gains that the stock market has to offer. So stay invested, stay diversified, be true to your risk tolerance, and over the longer term, you should have a happier outcome.
The best line that I saw about Big Cap, which was, it's a bit like a Birkin handbag that's 10% cheaper than it was before the crisis of confidence. So you say don't abandon large tech, but do you see it as an opportunity? If you see NVIDIA down 20%, yes. Does that smack of a great opportunity for you?
To me, it really does. I think the AI game is a long game. In fact, I used a baseball analogy earlier on your show, and I said I think we're just in the batting practice of a double header. But look beyond just NVIDIA. Look beyond the semiconductors and chips companies. How about the data centers, the hardware companies, the software companies? Build a diversified portfolio and recognize that AI investing is a long game, and these companies that are devoting significant CapEx to AI, it will take quarters, if not years, to get a return on investment.
Danny's got a lot to do. She's got to take me to baseball. She's got to take me to American football. She'll be up in surveillance a little bit later on. Kevin, good to have you with me around the desk this morning. That is Kevin Mann of Hennion & Walsh Asset Management. Coming up in the show, cautious on theme parks, bullish on films. Inside Out 2 is expected to help Disney's film division see its first profit. More on Disney's earnings. That's next. Context matters every day from New York on Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Donald Trump's not fighting for you or your family. He never sat at that kitchen table like the one I grew up at, wondering how we were going to pay the bills. He sat at his country club up in Mar-a-Lago, wondering how he can cut taxes for his rich friends.
Minnesota Governor there, Tim Walz, speaking at a rally in Philadelphia yesterday after being officially named as Vice President Kamala Harris's running mate. Joining me now is our Bloomberg government reporter, Courtney Rosen. Courtney, today it's Michigan, it's Wisconsin. What's the target audience? Of course, it's the real workers of the United States of America.
Today's focus is on courting unions. The United Auto Workers president, Shawn Fain, is going to appear with the pair in Michigan, in Detroit, Michigan, later today. President Biden, a big part of his support was unions, union leaders, union workers, and he spent a lot of time building and cultivating that relationship. Now, Vice President Harris and Governor Walz, in their bid for the White House, are going to spend today working on that as well.
Of course, Biden appearing on the picket lines during the auto strikes, which is one of those sort of very poignant moments in the past year when there's been real friction. This man is a money raiser, the vice president. He's a coin producer. How much have they raised since they announced he's her running mate? And overall, what does he politically bring to Harris's campaign?
The campaign says that they've raised $20 million for their run for the White House since the announcement of Governor Tim Walz yesterday morning here in the United States. We're expecting, Tim Walz, if you look at his bio, they've played up his experience as a coach, a high school football coach, his experience in the military, his experience as a dad. Those are all different experiences that he brings to the table compared to Vice President Harris, right? So we're going to see a different personality catered to a different set of voters in the Midwest for sure. Vice President Harris is from California. He's from Minnesota. So we're seeing a lot of opposites or differences, which is intended or purposeful to cater to a different set of Americans.
And obviously, we're building up to the Democratic convention in the next few weeks. How does that change? Anne-Marie was with me a little bit earlier on, and she said that the energy in that room yesterday evening was palpably different to what she'd seen, perhaps at some of the Biden gatherings. So what is going to be the focus between now and then and at that convention?
The focus is going to be introducing Governor Walz to the country. He's not very well known outside of his state of Minnesota. So that's number one. And number two is going to be building that enthusiasm, that energy going into the convention. We're seeing a lot of star power brought to Vice President Harris's rallies. You'll see singers, DJs brought that are really intended to draw people out and build some enthusiasm. And so we're going to see them continue to try and build that going into the convention later this month.
Okay, we'll keep our eye on that today in Michigan and Wisconsin, as you say, a clarion call to the unions. Courtney, thank you very much. Courtney Rosen there on the very latest on the campaign trail. Earnings. Disney results will hit before the bell today. Now, it's expected to show the film profit, while analysts expect a cautious tone on the theme park business. So how's it going to play out? Tom McKenzie is with me. Tom, it's a balancing act, really, isn't it? We've just heard from Airbnb warning about bookings being on perhaps less steady ground. So it's going to be interesting to see what they've got to say about the theme parks and perhaps the forward guidance. Good morning to you. What can I expect?
Yeah, Manus, look, you're right. This is a gauge on the consumer, of course, as well. And the earnings coming after they raised those prices across Disney+. So from between 10% to 25% in terms of the increase that's coming through, which for Bloomberg Intelligence speaks to Disney's pricing power, the fact that they have this pipeline of content to put onto the streaming service, and the fact that in terms of their viewers, their audience, it remains relatively sticky. They can hold on to those viewers and that audience whilst also pushing up prices. And it's a reminder as well that across the streaming space, you are having those increases in terms of pricing, whether that's from Netflix or Comcast's Peacock or other competitors in that space. Disney aiming, one of their key aims, of course, is by the fourth quarter, fiscal fourth quarter, they want to have that streaming service profitable. So that will be one area that we're looking at. But then, of course, you've got the theme parks, you've got the breakdown around subscriber numbers as well, and the films unit. And I can break those down for you, Manus. I know you're a Premium Plus subscriber, obviously, to all things Disney.
Yeah, I'm there, buddy. I've got more, you know, apps for watching TV than I've ever had in my life, but we can't name them all. I'm just curious. I mean, it's a pretty, there's a word that I could use, but I don't think we can use it on daytime television. It's a pretty robust move, let's say, by Disney to go for a 25% increase. Just as you see Airbnb warning about slowing demand, just as you see Heineken saying we're worried about the U.S. consumer. I mean, this is a high wire act. If the consumer is seriously challenged, why do you think they're going for this hike now? Because Hulu and ESPN also raised their prices. One could say there's a wonderful concert together here.
It's, I know the word you're reaching for, but let's go with punchy. And it is punchy, Manus, in terms of raising prices at a time when we're all questioning whether or not the US is heading towards recession, of course. But again, I'll take you back to the Bloomberg Intelligence analysis, which is, first of all, they've got the content to keep their viewers hooked to their streaming service. Number two, there's evidence to suggest that very few viewers are actually cutting the cord on Disney+. And number three, they need to hit profitability when it comes to Disney+. They've set themselves that key target. We're going to be looking for the subscriber numbers, of course, when the earnings drop pre-market. In terms of the most recent quarter, the estimates are that they're going to come in with about 154 million subscribers. The film unit, really interesting, expected to turn a profit for the first time in over 2 years, thanks to one of your film favourites, Inside Out 2, which has been very successful. That's expected to make up to some extent from what's happening in the theme parks business. To your point around the softness in the consumer, the theme parks is expected to be a little challenged. The outlook there may be a bit more conservative. So watch for that on theme parks, which still makes up about 2/3 of revenues for this company. So you've got the theme parks, you've got the films, which could come in slightly stronger on the back of that content. And then, of course, you've got the subs numbers around Disney Plus to watch for. 154 million is what's expected. Morgan Stanley saying they've got to be aiming for double-digit margins when it comes to Disney Plus. We'll see if they get one step closer to that, or, to your point around caution, whether actually consumers recoil at these pricing.
Yeah, I mean, the fight back, it happened a little bit with Coca-Cola. Tell me now, do you pay to live without the ads or not?
It's got to be ad-free, hasn't it, Manus? For now, at least. We'll see how everything else lines up. Be more selective in your streaming services. Go ad-free.
Go ad-free. Disney Plus without the ads, 14% rise, $15.99. What a bargain.
Yeah.
Tom, thank you very much. Keeping it real on Disney. Quick snapshot of what's going on. The air cover has arrived in a verbal intervention from the Bank of Japan, from Uchida, which is we will not raise rates for as long as we see a market unstable. Volatility is high in the FX market and in the equity market in Japan. So what you got is the dollar, of course, repricing there. By the way, dollar-yen has shifted from a low of 141.70 to 147.36. So a great deal of this move has been done. And the dollar index up 1/8%. Stronger GDP tracker data yesterday saying things are fine here in the United States of America. Euro dollar down by 1/8%, 109.11. Coming up, a big day for earnings and economic data. I'll run you through what's on the slate right here on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
It's Bloomberg Brief. I'm Manus Cranny in New York. A quick check on what's ahead for your day. Disney, as we've previewed for you, what will the film unit deliver as they put through price rises of 25%. Lyft report their earnings before the bell. The numbers in the U.S. consumer credit hit the tape at 3 p.m. Eastern. And more earnings after the bell. Warner Brothers, Discovery, along with Robin Hood. These are some of the stocks that are on the move. Airbnb, disappointing outlook, third consecutive quarter, and warned slowing demand for U.S. vacationers. Rivian, also under a bit of pressure this morning, down 8%. Second quarter revenue misses the estimates. The cash burn for the period was bigger than expected. And as I said, Disney earnings before the bell. I want to show you what's going on with the bond market because you saw a significant repricing in bonds yesterday, up 10 bips on the 10-year government bonds. We're adding to that this morning, up another four pips this morning. Now, Bill Dudley has just delivered his opinion piece, again, vindicated really in his call, pivoting from hawk to dove. He said the Fed needs to get to neutral, and the estimate of neutral is 2.4 to 3.8%, and he put himself in the top half of that range. More on that through the morning. European government bonds also flying higher. You do have an auction today, $42 billion worth of 10s, $25 billion worth of 30s tomorrow. But I like what BMO had to say, rethinking the rethink. The cuts are getting slashed. The proclivity to cuts are getting slashed. And that is essentially what Bill Dudley is talking about this morning. That's it from the team here on Bloomberg Brief. SPOOs are up 1%. The surveillance team will take you through the next 3 hours debating the scale of the air cover delivered by the Bank of Japan and to what extent it really does allow you to relock, reload, and take more risk or de-risk while you've got a window.
Institutions you've been very philanthropic with is your alma mater, Harvard. But recently, you've been very public about your criticism of the way Harvard handled the events of October 7th and their aftermath. Could you talk about that now?
The first reaction of a group of 34 Harvard Student Clubs on the morning after October 7th was to put out a statement saying that Israel was 100% responsible for the acts of Hamas. And my view on that was, that's ridiculous. You can come out and say, look, I'm very unhappy about Israel's treatment of Palestinians in the West Bank, or you can say, we can talk about the Gaza Strip, but you can't support terrorists, and particularly terrorists that rape and pillage and murder and burn and take hostages. Well, I got actually a text from a CEO in my industry. He's like, Bill, you know the people at Harvard. I'd like to know who the students are behind these clubs so I make sure I don't inadvertently hire them. And so I tweeted out that sort of made that point, and caused a bit of a firestorm, and I got a lot of pushback. Why are you picking on students? And I said, look, you can't hide behind a corporate entity if you're going to support terrorism.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This move in the market has a lot more to do with positioning, over leverage in some cases, volatility, than it does the economic fundamentals.
When the sentiment shifts, when the trends change, that always causes a lot of turbulence.
We've obviously had a level shift in the volatility environment across markets.
Momentum had been probably the best factor all year. I think we're going to really get exposed as that passive has now become somewhat of a momentum strategy.
When we put into context where we are, I think there's a lot more panic in the market than is warranted.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Here we go again. Let's get the show started. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance. After snapping a three-day losing streak on the S&P 500, equity futures looking to add some weight to that. For all the talk of the Federal Reserve, it's the BOJ who blinks first. Step up, the Bank of Japan Deputy Governor with this to say: I believe that the bank needs to maintain monetary easing with the current policy interest rate for the time being. The bank will not raise its policy interest rate when financial and capital markets are unstable. So guess what happened next? This happened next. Dollar yen, 147.50. A move of more than 2% against the Japanese yen. That is a weaker Japanese yen. And once you've seen that picture, you know what's happening on equity futures. Equity futures rallying on the S&P 500 up by another 1%. On the Nasdaq 100 up by 1.3. On the Russell, the small caps up by 1.8%. Anne-Marie, have we put a cork back in this story?
Well, Paul Donovan this morning says hawk to dove in under a week. Bank of Japan governor indicated there'd be a pause in interest rate hikes in the wake of the strong financial markets reaction. Central banks are not supposed to create disorderly markets, so this is not necessarily surprising. The last rate hike will not be reversed. The political pressure, he says, of BOJ to raise rates was not properly backed by economic fundamentals. There's a lesson there for all central banks. Potentially, he means the Fed.
What a mess. Mohammed Al-Arian joining us a little bit later this morning at about an hour from now. He's got some views on central banks placating markets. And I have to say, Danny, talk about placating markets. The BOJ blinking very quickly.
Are we reading too much into it, though? Because, of course, they don't want to hike when markets are chaotic. But Uchida went on to say, this is the deputy governor who was speaking, that I believe markets will calm down. And there I have no gap with Ueda on policy thinking, a.k.a. tightening and normalizing policy, which got us in this mess in the first place. So people are reloading up on those shorts, on those carry trades. Are they doing it too soon?
So that's the question I've got to ask this morning. Is that the message ultimately the BOJ wants to send this morning? Reload, you're good to go, there's the green light, as you were?
Surely not, and surely not to Anne-Marie's point, if there was political pressure that made them make this decision in the first place. They essentially don't want all those carry trades in there. They wanted to wash out the short positions. You'd have to say, okay, they didn't like the speed at which it happened, but surely they don't want all those speculative traders in the end to begin with.
When it looks at the carry trade, though, Citi, I was shocked last night, was talking about China's yuan more at risk of being squeezed, the unwind of global carry trades, as positioning the yen isn't extreme. So potentially the yen has unwound. But the issue, and Jonathan, you said this yesterday, when will we actually know when the carry trade for the yen is done? We don't.
147.57 is where dollar yen is right now. That currency pair positive by 2.2%. Equity futures doing okay on the S&P. We're positive by a little more than 1 full percentage point. Let's get the lineup for this hour. Coming up, Christian Nolting of Deutsche Bank as the S&P 500 snaps 3 days of losses. John Lieber joins us of Eurasia as the Harris Waltz ticket makes its pitch to Middle America. And Nuria Rabini of Rabini Macro Associates on his view that the US Treasury is manipulating debt issuance. That conversation coming up a little bit later this hour. Let's begin with our top story. Equities finding a firmer footing as the BOJ offers some verbal intervention. Christian Nolting of Deutsche Bank Private Bank doesn't think the volatility is over. We think our more cautious assessment of the market situation over the summer has been confirmed. We believe further volatility is possible in the coming weeks, but we see no fundamental reasons for a bear market. Christian joins us now for more. Christian, let's get into that. And welcome to the program, sir. What tells you that this isn't the beginning of something much worse? It isn't the beginning of a bear market.
Yeah, look, so from my point of view, and good morning from my side as well, from my point of view, I think if you look at the fundamentals, at the macro data, yes, it has been weakening a bit in the US, but honestly, unemployment rate at 4.3 is not that bad. Even if it goes to 5, it's not a disaster from my point of view. If you look at the earnings season is not a bad one, just the surprise momentum has come down. I would call this healthy. I think what's not healthy, if you see a Nikkei coming down 12% in one day, unwinding of carry trades. So if you unwind this a little bit, I think it's healthier for the market as well. From that perspective, I don't think we need to change our macro outlook and to be positioned like what we said is a barbell strategy. So keep the large caps, but start moving also to mid and small caps a bit more as a barbell, I think makes sense. And this was the more cautious positioning we had at the beginning, and we won't change it. I think the rotation trade will continue, but I don't see a massive recession in the US, which would cause a bear market.
Christian, just to pick up on that, the rotation trade will continue. Are you suggesting we should be picking up the pieces in small caps this morning?
So what we have been saying, well, if you look at performance, for example, both in the US and in Europe, if you look at, for example, Russell 2000, worse performance than the S&P, but if you look 1 month, I think it has been slightly outperforming, which is good news. Still to the downside, as you can see in the chart. Same in Europe. If you look, for example, in Germany at the DAX, large caps, and you get the MDAX or mid caps, slight outperformance. And I think if you look at the earnings momentum down the road, that's even more positive for the mid and small caps. And hence, we want to change this a little bit. We want to do that barbell strategy, and the market is obviously also going the same direction. I don't think that will change now.
And in terms of the barbell, on the more risky side of tech, people loaded up on Monday. Goldman Sachs writing that hedge funds dove in headfirst to tech. They were net purchasers of U.S. single stocks by the most in 5 months. Christian, it's hard to argue it was capitulation on Monday if people were still gorging on stocks. How healthy does that mean this market actually is after the sell-off to start the week?
Yeah, I think what has really changed is, and we've talked about this many times, right? So the bad news is no longer the good news. I think bad news is not bad news. And I think that's why we will continue to see the trade. And just to put everything now back into technology, I wouldn't be a bit careful. Hence, to balance out a little bit, diversification, I think, makes more sense maybe than the first 7 months of the year. That's why we want to balance a little bit. And from that perspective, I think it makes more sense to look at diversification. And that's the trade we are doing.
Diversification doesn't work when correlation goes to 1, though, Christian. And again, we got a taste of that this week. How do you want to protect yourself? Should you use Monday as a playbook for periods of more volatility?
Yeah, I think if you look at portfolios, right, and we manage, for example, multi-asset portfolios, I think what has worked well is between bonds and equities, the discussion we had a long time in markets where this was a positive. This now, if you look at government bonds, was a negative correlation. So that's what we want as a diversifier in the portfolios, right? So that's working now. I think that's good news from that perspective. And that's, I think, back to normality, back to more normal, back to reality, what we are seeing. And I think I really welcome this, to be very honest.
I have a question for you, Christian. The top of your note says, when Wall Street coughs. You obviously think this is a time to potentially get in. You think this is just a moment in the markets. What signals are you looking for to see potentially what a cough can turn into a big cold?
Yeah, that's what we always say, but maybe also in Europe, in Wall Street calls, Europe has already a cold because there's a higher beta often to the downside in Europe. Has not changed again from that perspective, so there's a bit more downside capture in Europe. I think that's the pattern you have in markets, which is not changing from our point of view. And I think that's what you need to take into account, right? You need to think, what is changing? Is that Monday really a change in markets? We have seen change in markets since mid-July, I think, where we see that start of the rotation trade. And as we enter a bit weaker situation on the US economy, I think this trade will continue. And as I said, however, I don't see a base case is not a recession in the US. Still, I think this trade will continue. So to bring everything back on Monday into markets, I think is a bit too early.
When you say that you have this barbell approach, you like tech, would you fund it with the yen? Do you like the idea of getting back into a carry trade?
Not too sure I would like to do that, because I think the stance, if you look what the central bank wants, right? I think still the Bank of Japan doesn't want to have a quick move in the yen and doesn't want to have a 2-week yen, because with that they would theoretically, and we've seen this, import inflation. So their stance will still be not to have a 2-week yen, but to slightly and slowly probably appreciate this a little bit. And that is not positive for the carry trade, so I would not load up on carry trades right now. From that perspective, that's why I'm saying this rotation trade is probably not over as well.
Christian Nolting, Deutsche Bank. Christian, appreciate the update, sir. Thank you. I love Danny's question. Do we need to rethink risk mitigation strategies? It's something that Christian Muller-Glissman over at Goldman's thinking about as well. Given the massive rally we saw in bonds earlier this week, have we pulled forward some of the buffer that you can receive from, say, having bonds in a portfolio?
Well, also part of the problem with that is that bonds, sure, they had a big rally, but they undid it once we got any strong data, whereas equities kept going. So you get this idea that equities are vulnerable to positioning, that froth can get washed out. And when that's the case, and when economic data is surprising to the upside, maybe bonds aren't working as they should.
Bond yields a little bit higher on a session, up by 5 on a 2-year. Back through 4% on a 10-year yield, up by 4 to about 3.93. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Hackers. Hey, Yahara.
Hi, John. Bloomberg has learned that U.S. officials plan to propose limits on sales of Chinese vehicle software as soon as this month. Sources say the move will include curbs on the use and testing of Chinese technology for autonomous vehicles. The restrictions are meant to keep Chinese companies from collecting data on U.S. drivers, as well as preventing China from having a bigger hold on the U.S. market. Shares of Novo Nordisk are falling in European trading. The company reporting sales of its blockbuster weight loss treatment Wegovy fell short of analyst estimates, as did its biggest drug, Ozempic. As for the outlook, it says operating profit will grow 20 to 28%, down slightly from its earlier forecast. Novo also withdrew its submission to U.S. and European regulators for approval of Wegovy for the treatment of heart disease, but said it will resubmit next year with additional data. And Disney shares are trading higher in the pre-market. The entertainment giant announcing it's raising the prices of its streaming services. The price for its cheapest offering, Disney Plus with advertising, will climb 25% to almost $10 a month. Disney Plus without ads will cost nearly $16 a month, marking a 14% increase. The changes take effect on October 17th. Disney earnings are due at about 6:30 a.m. Eastern, and we'll have an interview with CFO Hugh Johnston at 7:30. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes. That interview about 1 hour and 20 minutes away. As we wait for those Disney earnings, everything we've heard from corporate America, just to summarize, it goes something like this: a loss of pricing power and declining sales in certain places. Interesting to see what the streamers see. What are they seeing? What tells them they've got this pricing power that won't lead to big churn in the business?
And they're not the only one that's doing it. What I have to assume is if you looked at their cost rises, they're not doing it for their big bundle. So the one that has ESPN Plus, Hulu, and Disney. So maybe they're just trying to get people to go to the bundle because they think that's stickier, so we make everything more expensive except for that product.
Hugh Johnston coming up a little bit later this morning. Must-watch conversation. Don't miss that. Up next on the program, the Harris-Walz campaign making its pitch to Middle America.
Donald Trump's not fighting for you or your family. He never sat at that kitchen table like the one I grew up at, wondering how we were going to pay the bills. He sat at his country club up in Mar-a-Lago, wondering how he can cut taxes for his rich friends.
Quite a rally in Philadelphia yesterday evening. We'll pick up on that in just a moment. Live from New York City this morning. Good morning.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Julian Emmanuel of Evercore just publishing. He says this: the wall of worry that stocks traditionally climb on the way to higher prices has been fully rebuilt and is ready to be climbed. And the labour market data makes it feel like the ascent of Mount Everest. We get more labour market data tomorrow morning, 8:30 Eastern Time. Jobless claims in the mix. That's the last big data point of the week. Had a CPI in about a week's time. Under surveillance this morning, the Harris-Walz campaign making its pitch to Middle America.
Donald Trump's not fighting for you or your family. He never sat at that kitchen table like the one I grew up at, wondering how we were going to pay the bills. He sat at his country club up in Mar-a-Lago, wondering how he can cut taxes for his rich friends. Donald Trump sees the world a little differently than us. He doesn't know the first thing about service. He doesn't have time for it because he's too busy serving himself.
Here's the latest. Vice President Kamala Harris and her running mate Tim Walz heading to Michigan in a bid to court the union vote. A new national poll by NPR and Marist showing Harris holding a 3-point advantage over Donald Trump. John Lieber of Eurasia Group joins us now for more. John, let's talk about the choice first, and then we can get into some of the campaigning. What do you think was the deciding factor between going with Walz and not with Shapiro?
I think they seem to get along. Walz is a good guy. He's got a very progressive record in Minnesota that's been endorsed by all parts of the Democratic coalition. And I suspect, and we don't know this, but I suspect they had concerns that Shapiro was going to divide parts of the Democrats because of his record on Israel and Palestine.
John, when it comes to the campaign, both of these campaigns are going after their base. Who is vying for the center right now?
I mean, I think the Democrats are making a very strong play for the center right now by not really talking about their record and not really talking about policy and being very guarded with Kamala Harris by not letting her do any live interviews. She's not like going on the podcast circuit. She's just going out and giving these set piece rallies with now a running mate that excites the Democratic base. And I think that reflects an effort to present her as the moderate choice in this election cycle. Meanwhile, Trump is on Truth Social saying all kinds of wild things, and I don't think he has the ability to speak to the center. That's just not what he does. There are going to be undecided voters who like both flavors, though, and this is probably still going to be a close election, even as Harris is surging.
But when it comes to policy, Governor Walz, when he was in the House, where you were also working at one point, he was definitely an individual that was in the center. But after those 12 years, as a governor, can anyone say that this individual is a moderate?
Yeah, I think that's spot on. I mean, the unique thing for Walz is that when he got into office in Minnesota, he had the trifectas. They controlled the state house and they controlled the legislature. And what you got was a policy record that most liberal Democrats would have cheered pretty loudly. Expanding access to abortion, restricting gun rights. He's very union friendly. I think this is going to be something that Republicans are going to be hammering on over the next several weeks. To me, the big question is, can they define this guy who's like a super normal, likable individual as somebody from the far left? And I think that's going to be part of their messaging strategy. And they haven't been very good at that so far in the 2 or 3 weeks since Biden dropped out.
Well, when it comes to the new Marist polls, he's viewed positively by 17% of U.S. residents. 12% only have an unfavorable view, but 71% have never heard of this man. They don't know how to rate him. So is this going to be a race for how to define the VP? Or do you think he just takes a back seat and this really becomes down to Harris and Trump, and she needs to go out there and answer some policy questions?
Yeah, no one knows who any of these guys are. But, this race is going to be about, they're going to say this is the most progressive ticket ever. And that's really what this is going to be about. They're going to say that Harris-Walz is extremely progressive. These are two liberals, one from the coast, one from the middle of the country, who's aligned with the Democratic Socialists. And they're going to continue to attack him. So Walz has upside for Harris. That rally last night, there was a ton of energy there. They've raised nearly $500 million in an extremely short amount of time, and they're going to be able to run a competitive race. Defining Walz and defining Harris on their policy agenda is going to be the big challenge for the Trump administration, because the Trump campaign, because Trump's personality is so strong. He makes this about personality and not about policy, and they need to pivot over to talk about their record if they want that to succeed.
I have to say, John, it's remarkable to think about where we came from with this Democratic Party. Before Biden stepped down, there was talks of fracturing in the party. Even after Kamala Harris became the nominee, we still talked about that when we're talking about the VP pick. Yet you look at the reaction. You had the big unions come out in favor of Walz. You had Manchin come out in favor of Walz. You had Ocasio-Cortez say it was an excellent pick. Does this culminate in the coming together in a no longer fractured Democratic Party, or are there still splits under the surface?
Yeah, I think this unites everybody. And in that sense, that's what makes it a good pick. And you look at Biden before he dropped out, and there was a significant number of Democrats who were not excited about voting for Biden. This showed up in many of the primary states, and it showed up in the enthusiasm numbers, where Biden was lagging behind Trump by 20 or 30 points. Harris has nearly closed that entire enthusiasm gap in just 2 weeks. So Democrats now are fired up, and they're fired up about the one thing that unifies them, which is defeating Donald Trump. They think they now have the ticket that can do that, and they like the policy mix that they're seeing out of these two candidates.
What is that policy mix, John? I mean, what can you really nail down about this new ticket that gives you a clear indication of that?
It's going to be the same stuff that Biden's been offering for 4 years, and the same stuff that Democrats have been offering for a long time. So increasing taxes, particularly the corporate tax rate, and higher taxes on high-income Americans, expanding access to things like health care. They're going to try to enshrine abortion rights in federal law, and they're going to do more to make it easier for people to join federal labor unions, which Democrats have been trying to do for decades without success because of the mixture of moderate and conservative Democrats in their coalition. A lot of those moderate and conservative Democrats, particularly Joe Manchin and Kyrsten Sinema, that were able to block the progressive parts of the Biden agenda, are not going to be in Congress next year. So if they come in with a trifecta, you're going to see much bigger spending on green energy, and you're going to see a lot of the things that Biden couldn't get done suddenly achievable.
That's the word I was looking for, energy. What is the energy policy?
More green energy, fewer fossil fuels. I mean, it's pretty straightforward. The Biden administration's banned LNG exports. They haven't really been able to do much to stop getting oil and gas out of the ground here, but they have done the largest climate spending program in probably world history. And that's the kind of thing that I would expect to see the Harris administration doubling down for. More subsidies for green energy, battery development, more industrial policy to get production out of China and into the United States, and more self-reliance when it comes to American green energy, but very hostile towards fossil fuels.
Do you think they dance around the fracking issue?
I think they do on the campaign. I think it's hard to do a national fracking ban, and you're going to have a lot of Democrats that are not in favor of that. So I don't think that's going to be something they're going to talk about on the campaign. It's possibly something they could achieve in a second administration through rulemaking. That stuff does take time, and a 4-year term is typically not long enough to do really aggressive regulations. But an 8-year term, and which is what they get if Harris were reelected, it's possible.
You mentioned taxes. I want to get your sense of where you think the governor stands on taxes, because when he was in the House, he kind of went both ways. At one point, he's just one of 19 Democrats back in the day to vote for an extension of the George W. Bush tax cuts. Do you think potentially when it comes to things like taxes, he can moderate Harris?
No, I don't think there's. I mean, you look at the Biden tax plan, and they want to roll back the Trump tax cuts, at least for high-income people, and particularly they want to raise the corporate tax rate. So, I don't see any Democrat deviating from that. The question is going to be how high. And Biden's proposed 28% on the corporate tax. A lot of Democrats in the House and Senate are more comfortable with 25. but on the high income tax rates above 400,000, on things like taxing the unrealized gains for people who have a net worth of over $100 million. All of these ideas are going to be live only in a situation where Democrats get the House and Senate and the White House.
Interesting. John, appreciate your input as always, sir. One of the best. John Lieber there of Eurasia Group. On the new matchup, finally complete, we know who the VP is. China's an issue here that I think probably needs some more detail. This is a governor that knows a lot about China and may offer a different perspective on the path forward here.
And he's talking a lot about his experience in China. He was a teacher there, dealing with the Chinese people. Potentially he's going to offer up some attacks on Republicans, but at the same time, he has come out and said he wants to be strong when it comes to competition on China. But there's a number of policy issues. But again, I go back to this poll that was done before he was selected. More than 70% of Americans don't even know who this is. And the race, the timeline is so short. We talk about November 5th, but actually people are going to be voting in September if they do early mail-in ballots.
So this gives the opposition an opportunity to define the gentleman for everybody. And I just wonder how much ammunition a Governor Walz offers the Republicans versus, say, a Governor Shapiro.
Well, he's going to offer them a lot of ammunition when it comes to, I think, two key things. One, social issues, especially given Minnesota is now a place for gender-reaffirming care. Also, second, when it was the 2020 riots following the killing of George Floyd and this upheaval you saw in Minnesota, he got a lot of criticism for not calling in the National Guard sooner. So I think these are two key issues you're going to see Republicans really want to hammer him on.
The city was quite literally burning through all of that. I don't think we've forgotten those images. Much more still to come on all of that. Just to reset, equity futures on the S&P 500 positive here by a little more than 1 full percentage point on the S&P. Coming up on this program, we'll catch up with Nuria Rabini of Rabini Macro Associates, arguing that the United States Treasury is manipulating debt issuance. Janet Yellen had some things to say about this as well, and this conversation is just around the corner. In the bond market this morning, Treasury's a little softer, yields a bit higher, up by 5 basis points on a 2-year. Your yield north of 4% at 4.02. On a 10-year, up 4 basis points to 3.93. From New York City this morning, good morning and welcome to the program. You're watching Bloomberg TV.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
Let's get to equity futures. Your scores this morning, and good morning. We're positive by a little more than 1% on the S&P, on the Nasdaq up by 1.3, on the Russell up by 1.8. On the S&P 500, we almost followed the worst day since 2022 with the best day since 2022, but those gains faded, and faded pretty hard going into the close. On the S&P 500, we closed yesterday positive by 1 percentage point. In the bond market, treasuries that are softer on offer, yields up by around about 5 basis points. On a 2-year, 4.02%. On a 10-year, up 4 to about 392.97. Danny talked about this repeatedly through the week. Light on data, light on Fed speak. Next stop is jobless claims tomorrow morning.
It seems like in the meantime, this bond market is just taking its cue from equities. Equities are rallying, therefore we can sell bonds. But tomorrow is important. One, because again, light on data, but either it could confirm or deny this narrative that has been building, that there is weakness in the labor market. Whether or not we should judge one jobs number is another question. And then comes next week, PPI, CPI,
big week,
and retail sales.
ISM services denied. We moved on from that pretty quickly. Let's see if jobless claims confirm tomorrow morning. Danny talked about equities and bonds. What were we taking our cue from? I think we're all taking our cue from this in foreign exchange. Dollar yen at 147.32, positive by 2 full percentage points on the session. That is a much, much weaker Japanese yen. If you just look at the chart and that gap higher there at around 10 Eastern last night, let's get to it. Under surveillance this morning, the Bank of Japan sending a dovish signal, pledging to refrain from hiking interest rates when markets are unstable. We heard from the Bank of Japan's deputy governor blaming recent volatility on concerns over US growth. The quote from the deputy governor went like this: "I believe that the bank needs to maintain monetary easing with the current policy interest rate for the time being. The bank will not raise its policy interest rate when financial and capital markets are unstable." The message loud and clear in the FX market.
I just can't wrap my head around the idea that we saw the biggest drop in the Nikkei since 1987, and we're almost unchanged on the week. I mean, that is just wild to me. And I think part of the volatility that, again, I think people are overlooking, that the deputy governor followed up those comments once he saw the market start to rally and maybe thought, oh no, that's not what I wanted to do exactly, saying that, look, I believe that the markets will be calm, aka I will be able to act, and I am closely aligned with UEDA here. And what does UEDA want to do? He wants to tighten policy, which got us in this to the first place. So maybe we're overlooking some things here and just getting excited about his initial comments.
It feels like he went from dove to hawk to maybe pulling it back slightly, because he also said that communications with the market, he noted this, will need to be done carefully. So basically what they're saying is, we don't want to be involved in this when markets are unstable, and we're going to take a pause.
Well, markets have certainly been unstable. That's the latest for Japan. I want to get to the latest in the Middle East. A really important update. Hamas naming the mastermind of the group's October assault on Israel as its new political leader, dealing a blow to ongoing efforts to reach a ceasefire agreement in Gaza. The announcement coming after the group's previous leader was killed in Iran last week. If you were hoping for de-escalation, no signs of it whatsoever based on this pick.
Well, Sinwar's the individual that they've now elevated. He has been the one calling the shots, though, so we cannot make any bones about that. This individual, though, is pretty much #1 on the target list for Benjamin Netanyahu. And he would have been the one, Jonathan and Danny, to call the shot on whether or not a ceasefire went through. Optically, though, to put him as the face of the deal now creates a little bit more tension and makes it a lot harder publicly and optically for this administration. But whether or not a deal goes through or not, it's got to be up to Netanyahu.
Are we still awaiting the retaliation to the retaliation to the retaliation? And I think that goes on and on over the last few months.
We are. There was a militia attack on a U.S. base west of Baghdad, but we still are awaiting a response. And we're not exactly sure exactly what that response is going to be. Iran may take their time, and they might actually see potentially how they can respond without escalating into a war. But I would take note of what Cyprus came out and said today. 10 countries, a dozen of countries have called on them because they're very close to Lebanon and wanted to make sure that they're in place to help potentially evacuate some of their citizens.
That's the latest in the Middle East. I just want to cross over to Europe and check out what's happening with the biggest company in the European equity market, and that's shares of Novo Nordisk, falling after sales of its blockbuster weight loss drug treatment, Wegovy. We call this a drug or a treatment? Wegovy? I think it's a drug, treatment, whatever. Disappointed investors this morning. Revenue was also hit by higher than expected price concessions to US managers of pharmacy benefits, something Novo's calling a one-off factor. That name's since recovered overnight. But this was a big boom story, just like AI. That's like Europe's AI story, Novo Nordisk.
Totally, and it shows you the danger in putting all of your eggs in one basket and what happens when you have competitors come into the fore. Sure, the CFO said it was a one-off, but the fact remains that they had to take price concessions. And this has been one of the biggest questions around Novo Nordisk. You have Eli Lilly already out there with a product. You have Roche trying to come in with a pill that would presumably be easier than taking a jab every time you want to lose weight. So what happens when they have these competitors in the market? Surely pricing needs to change.
Well, also, I have to say, I have the smallest violin this morning for this company, given the fact that they've soared some 230% since June of 2021, because this drug treatment, I think it depends what you're taking it for, whether or not you call it a drug or a treatment, has absolutely soared because everyone wants to get their hand on it.
Monster rally, and we're only pulling back by a couple of percentage points in the European session. I want to turn back to the United States. Nouriel Roubini of Roubini Macro Associates making some headlines, co-writing a paper saying the Treasury is manipulating debt issuance to boost the US economy. Treasury Secretary Janet Yellen rejecting Roubini's argument, saying it, quote, suggests a strategy that is intended to ease financial conditions, and I can assure you 100% that there is no such strategy. Nouriel joins us now for more. Nouriel, wonderful to hear from you, sir. Let's just take it from the start, from the top. For the people that missed that and haven't read that paper that you co-authored and put out in the last couple of weeks, activist Treasury issuance. Just take the opportunity to explain to our audience what you're talking about.
Well, Treasury usually in its debt management has what they call regular and predictable issuance. They say how many short-term bills as opposed to coupon flipping bonds they are going to issue. In the past, the rule has been that not more than 15 to 20% of the stock of debt should be bills that are short-term, the rest of it being medium and long-term. But since last year, the issuance of short-term bills has been something like, at the margin, the flow of it, something like 60 to 70% of the issuance. So they've been issuing much less of the long-term bonds and more of the short-term bonds. That like a backdoor version of quantitative easing, because it reduces the supply of long-term bonds, it boosts the price and reduces the long-term interest rates on 10-year treasuries. We estimate that the amount of it has been such that is equivalent to a reduction of 25 basis points in 10-year treasuries or 100 basis points reduction of the Fed funds rate by the Fed. So the Fed is trying to tighten financial conditions to slow down the economy and inflation to achieve a soft landing, while Treasury has been trying to ease financial conditions by trying to boost the economy. So that's what's been happening.
Nouriel, there's a suggestion in the piece that this is a deliberate political project. What tells you that that's ultimately what they've been doing, and something, of course, that they deny?
Well, first of all, they do admit that what they're doing has an impact on financial condition. They cannot deny that. But then the question is about the motivation. Now, Treasury traditionally issues more of the short-term bills when there is a recession, a financial crisis, a liquidity shock, an episode like COVID, or other types of turmoil like a severe recession. That's normal and that happens. But we live in a time in which there is no financial crisis, growth is above potential, inflation is still above target, and financial conditions are normal. And until recently, effectively asset prices like the stock market were at all-time high. So the question is why they're doing it at this time. And my explanation was that last summer when 10-year Treasury went to 5% because suddenly the bond vigilantes globally woke up and realized that our deficits are large and unsustainable, Treasury got kind of nervous about it, and they decided to effectively a form of backdoor QE by buying more of the bills and issuing more of the bills and less of the long-term bonds. And that eased financial condition quite significantly.
The Treasury official that oversees debt issuance, Joshua Frost, had this to say. He said the autumn slowdown in added issuance of 10, 20, and 30-year securities amounted to roughly a 1% change. So how is that basically the Treasury knowingly trying to, what it feels like, manipulate the markets or make financial conditions easier if it's only a 1% change?
Well, what has happened is that the range of the stock of term bills was between 15 and 20. Right now it's significantly above 20. And the flow in the last few months has been something like 60 to 70% of the new issuance being bills. And on top of it now, the Treasury started even a forward guidance, Fed style. They've been saying that for the next few quarters, you can expect that the issuance of T-bills are going to be significant like in the last few months or quarters. That's a signal that this policy has gone in a very different direction from regular and predictable, very different from the norms that they choose themselves, about 15 to 20%, and it's continuing to go in the same direction.
Well, Nouriel, the way that it's the same of norms, and you kind of hinted at this, that at every turning point, this is what the Treasury does. And not that it's a crisis, but the contention is that interest rates are coming down. That's why they issue more at a turning point, because essentially interest rates come down. You don't want to lock in long-term debt when it's going to come down later. So putting politics aside, if you thought interest rates were coming down, isn't this the right policy?
Well, first of all, the Treasury is never trading rates. That's not their jobs. Secondly, the yield curve until recently was significantly inverted. So by issuing bills, they're borrowing at much more expensive rates than you would otherwise. They're subject to refinancing risk and rollover risk. And we're seeing that there is episodes of market turmoil. And we know that bond yields are not going to go back to 0 or 1%. There are fundamental reasons: higher inflation, lower savings, more capex. Why the equilibrium long-term real and nominal rate for long-term Treasury is probably closer to 5%, if not higher. So the right thing to do will be just to issue long-term debt rather than borrowing at much higher short-term debt. I don't believe. Right now there is an episode of risk-off. It's going to be probably temporary. Yields are slightly lower. But if you're looking at medium term, given what's going to happen to the deficit, if Trump is elected, he's going to have tariffs, he's going to weaken the dollar, is going to have permanent tax cuts that are not funded. All these things imply higher nominal and long-term interest rates. So this policy doesn't make sense, and Treasury is not supposed to trade rates. They're not speculators.
Ultimately, we're exploring two things here. One is consequences, outcomes. The other is motivation. It's much more difficult to decipher motivation. Let's talk about outcomes. Given the economic data of the last week or so, Nouriel, is there any evidence this is working?
Well, what's happening in the last week is that markets are getting nervous about a recession. But I would say the stock market has predicted 10 out of the last 3 recessions. Same thing with the bond market and the inverted yield curve. The markets have been mistaken even about the Fed. You know, at the beginning of the year, they expected 6 rate cuts when the Fed said 3. Then when the Fed went to 1, they expected 3. Now they expect that the Fed is going to do 4 of them, 25 basis points. So the markets are often wrong about what's going on with the economy and what the Fed is going to be doing. There is some significant, evidence of some slowdown of the economy, but I don't think the data suggests that we're going to have a hard landing anytime soon. If anything, actually, there's some elements of strength in the economy.
Elements of strength from Nouriel Roubini. So, Nouriel, that tees up quite an obvious question. Let's talk about the market. You think it's a time, perhaps, where the economy is stronger than people think, which might come as a surprise to people watching this program, given how bearish everyone's become over the last few days. I think we all noticed last week an application for a new ETF. You're one of the 3 portfolio managers listed on the Atlas America Fund. Nouriel, with everything you've said in mind, what is going to go into that fund? What are you offering that perhaps we're missing?
Well, first of all, we're trying to hedge against tail risk like inflation, debasement of fiat currency, de-dollarization, global climate change, pandemic, protectionism, deglobalization, cyber warfare, social political instability, and so on and so on. When those risks occur, like they occurred in the recent past, you have stagflationary shock, inflation is higher, growth is lower, and the traditional defensive asset that is long-duration treasury does terrible. Look what happened in 22 when treasury did worse than S&P. Look what happened last summer when yields went to 5% and treasury lost 10%. So if inflation was even only 5%, bond yields will be something like 7 over the medium term. Today, they're less than 4. So we'd have another 40% loss on what is supposed to be the defensive asset, that is $20 trillion outstanding of long-term treasury. So you need something that does well in bad times and also helps you to rebuild America. We need to have climate-resistant real estate, new communities, infrastructure, food security, reshore green metals, and rare earths, and so on. So what's going on in this new fund is several things that are hedging you against those risks. First of all, climate-resistant REITs. We have looked at all the REITs, and we see which ones are in the parts of North America that are going to be less subject to climate change. Secondly, these ETF allow you to invest into 15% of illiquid assets, new communities. Even Trump is talking about creating 10 new freedom cities. Biden and Harris want to invest into new infrastructure. We want to have food security. We want to reshore critical things. We need gold in this ETF to hedge against social, political, geopolitical, and financial risk. And if inflation is going to be higher, you want to stay away from long-term treasury into stuff that's going to be having higher yield without having a price effect, short-term treasury and tips. So it's a dynamically optimized combination of all these assets that provide you a new, much more resilient defensive asset, and one that invests actually in rebuilding America at the time when we need to do so.
That's the pitch. Fascinating stuff. Nouriel, when you're back in New York, which I think is next month, we're going to sit down and have a longer conversation about this. Appreciate your time this morning. Nouriel Roubini there of Roubini Macro Associates. A lot to work through there. Dr. Doom didn't sound too bearish at all on the economy.
No, bearish on duration, though. That was very clear.
Yeah.
And I think that's kind of where some of this argument about the Treasury really, the rubber hits the road, because the assumption, at least from the advisory committee, is that rates will be coming down, so it makes sense to borrow on the short end. Whereas Nouriel is saying rates are going to be higher, therefore, than borrowing on the short end, it doesn't make sense, so it must be politically motivated.
Drew Madison MetLife writes in, he's right about the result, Yellen is right about the intent. So I guess we call that a draw. Let's give you an update on stories elsewhere with your Bloomberg Brief. Here's Yahara Hackers. Hey, Yahara.
Hi, John. Shares of Lyft are lower in the pre-market. The ride-sharing app posted a lower than expected outlook for the current quarter. However, it did post a profit with a record number of rides and record number of new drivers. Lyft still doesn't expect to be profitable on an annual basis for several years. Rival Uber reached that mark last year after more than a decade in business. CVS is trading lower in the pre-market. The pharmacy slashing its outlook for the third straight quarter while announcing $2 billion in cost-cutting measures. Brian Kane will also leave his post as the president of the Aetna Insurance Unit. The company's CEO and CFO will take over those duties during a search for a successor. CVS telling investors over the coming years, more savings will come from the use of AI and streamlining and automating operations. And former President Donald Trump is sitting down for an interview with Tesla CEO Elon Musk on his social media platform X. Trump saying in a post on his social media site Truth Social that the conversation would take place on Monday night and that more details would follow. Musk endorsed Trump in a post on X last month, about half an hour after the assassination attempt on Trump's life. That's your Bloomberg Brief. John?
Yahara, thank you. Up next on the program, it's bye-bye, self-landing.
The fact that the unemployment rate is up to 4.3%, that's 30 basis points higher than where they think it's going to be by year end. It's not about just the data as it's come in. It's also about the economic outlook.
Mike Dada of MKM Roth joining the program next. From New York, this is Bloomberg.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways, it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of, I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice, saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
DOJ or other authorities.
Could face bigger challenges next.
Was going to keep bringing World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Bloomberg loves earnings.
I know it's like your Super Bowl,
I
right?
can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Equities bouncing back. That bounce continues. Equity futures here up by 1.2% on the S&P 500. Under surveillance this morning, it's bye-bye. Soft landing.
The data already justify a 50 basis point move. I mean, the fact that the unemployment rate is up to 4.3%, that's 30 basis points higher than where they think it's going to be by year end. It's not about just the data as it's come in, though they keep wanting to make it about that. It's also about the economic outlook. I think the distribution of risks is skewed to the downside, and it's important for the Fed to neutralize those downside risks by easing monetary policy.
So here's the latest. A weaker than expected July payrolls print, putting extra emphasis on weekly jobless claims due tomorrow morning. Michael Dada of Roth MKM isn't waiting for that to draw conclusions. He says, bye-bye soft landing. It was nice knowing you. We may be finally entering a bad news is bad news environment with analysts' double-digit earnings expectations for the next 12 months looking increasingly out of sync with the evolution of the macroeconomy. Mike Dada joins us now for more. Now, Mike, before we move on, I just want to explain something to our audience. That quote, the timestamp on that quote is really important. That wasn't on Friday. That wasn't on Monday. It wasn't in the last 24 hours. That was last Tuesday on July 30th. It predates what we heard from the Fed, what we saw in payrolls. I can see you smiling. You're feeling good, and you should be. Mike, can you tell me what you saw that was guiding that view of things before we saw it for ourselves on Friday?
Yeah, thanks a lot, John. I really appreciate that. What we were seeing when we wrote that note was the Conference Board data for July. So this is survey-based data that essentially asks people about their labor market perceptions and their current circumstances. And what we saw from that data in both June and July is that the present situations index had tumbled about 20 index points from where it was 1 year earlier. Since the data goes back to 1980 or so, we haven't seen anything like that, a move down like that outside of actual recessions. And then equally importantly, there's a spread between those saying jobs are hard to get and jobs are plentiful that correlates very strongly with the unemployment rate, and that pushed to a new high for the year in July, and lo and behold, we got another pop in the unemployment rate. But those trends were underway even before the July jobs data. So I think we need to consider that, given that there's a debate about whether the data last Friday could be fluky. These trends have been underway, they're persisting, and our fear is that the soft landing could be slipping away.
Does that also imply that the Fed is just too far behind, that the data has already started to slip and they didn't go in July, therefore going in September, there's only so much they can do?
Yeah, I think that's exactly right. I mean, if we listen to Fed Chair Powell, what he was talking about at the last Fed press conference was this idea of a totality of the data. And if you look at a totality of the data, it really is a mixed picture, right? GDP and jobs look okay. And some of the other data that I spoke about, some of the survey-based measures and the move in the unemployment rate look more recessionary. And so this is why business cycles come to an end. When you're at an inflection point, it looks a little bit messy. It's not totally clear cut. So if policymakers are waiting for a completely obvious recession to slap them upside the head, then they're going to be way behind the curve.
Mike, you had a couple of trades. One was long duration. In equities, it was focused on defensives. We've had a big reset in markets since that call. Where are you now on where we should be in markets?
Yeah, I think probably investors should still stick with the defensive categories for now. We've been an advocate of the utility sector since last fall, really got smashed hard last year with long-term interest rates rising so violently, up to 5% on the 10-year, and so a substantial chunk of that has been reversed. I think we're going to have to be a little bit more patient for some of the cyclicals, even small caps. The valuations have come way down relative to the overall S&P 500. So I do think there are some increasingly attractive areas here that are cyclical, but the business cycle matters a lot. And so you don't want to be too early there. Typically, those areas are bottoming out as you move into like the middle part of a downturn. So I think for the cyclicals, more patience. I would not be chasing large cap growth concerns here. The valuations going into this correction were super high. We've been using the phrase rarely seen and never sustained. So the forward PE on the S&P 500 Infotech index was above 30 coming into this correction in mid-July. That's even above where we were in late 21, early 22 before a big downdraft in the equity market led by Infotech stocks. So my concern there is that the expectations are just way too high. I mean, overall earnings expectations growth for the S&P 500 now is 13% over the next year. That looks totally out of kilter with all the other indicators that we look at, and certainly a slowing economy, if not recession. So, I think we're probably going to be in a bit of a volatility storm here for a while. So defensive categories, I think, makes sense to stick with for now.
Mike, great call. It's great to catch up, sir. We've got to talk longer next time. Michael Dowder of Roth MKM on the US economy. Disney, numbers just dropped. They're saying all the right things. Earnings come in better than expected. The combined streaming businesses achieve profitability. They now see full year adjusted EPS growth target of 30%. The stock is up by 3.3% in the pre-market. More on Disney in just a moment. In the next hour, we'll catch up with Mohammed Al-Aaron of Queen's College, Cambridge, with us for the hour here in New York. We'll speak to Bloomberg's Josh Wingrove. We'll speak to the Disney CFO, Hugh Johnston, and former New York Fed President Bill Dudley. Quite an hour in the second hour of Bloomberg Surveillance. It starts in about 4 minutes' time.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977, when by then I had a little research station, and 4 of my students were kidnapped, and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
We are really at the cusp of real economic weakness.
I think the economy is cooling. It's not collapsing. I still think that the jobs market is going to maintain, relative strength.
There's nothing structurally wrong with the U.S. economy. Everything that ails the economy is a function of tight monetary policy.
I think policy is restrictive right now. Right now, I think inflation risks are coming down and employment risks are rising.
For all the talk about growth concerns, I've talked to very few investors who really have genuine recession fears.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
I'm not sure if business leaders in northern Japan thought they'd be the epicenter of global markets in the last 24 hours, but they were. They were entertained by some comments from the Bank of Japan deputy governor. Those comments look like this. Let's get to the quote. I believe that the bank needs to maintain monetary easing with the current policy interest rate for the time being. The bank will not raise its policy interest rate when financial and capital markets are unstable. That quote, enough to ignite some Japanese yen weakness. Maybe that was the intention. I'm sure you all assume it was. 147.20 on dollar yen. That currency pair gapping out by 2 percentage points. And once you see that, you know what the next board looks like. Equity futures on the S&P positive by 1.2%. Or the Nasdaq 100 up by 1.5. On a Russell, the small caps up by 1.8. Anne-Marie, it's as you were, according to the BOJ.
Yeah, it is, but they're not going to reverse the last rate hike. So basically what they're saying is we're putting it on pause. Danny's brought up a really good point of the fact that they're also pretty much saying that on top of the fact, what Ueda was saying is they're going to pause interest rate hikes, but they're not changing policy per se at the moment.
Right, that's the point. Maybe they're just moving slower. But the deputy governor is saying that I'm aligned with Ueda. Nothing has changed, and markets will go back to calm. And once they go back to calm, the implication is that they will tighten and they will have the hawkish forward guidance, of course, relative to what the BOJ usually does. So yeah, if you're loading back up on carry trades this morning, good luck to you.
Dollar yen very much at the center of our world. Much more on that in just a second. I want to bring up one stock in the pre-market, Disney. Initially, we had a spike higher, and now a drop lower. Disney's down by 2.5%. Disney's saying all the right things about profitability in the streaming business, about earnings, about guidance, about the third quarter, and all the wrong things about the theme park. And they're the two stories going on right now with this company.
That was the one spot of weakness that we can point to, right? That their experiences, their theme park is weaker. It is the split that we're seeing, this confusing nature of what we are in, where you can have one company like Disney having a bifurcated consumer within it. You can have an Airbnb saying that we're seeing weakness in the consumer and people don't want to travel. And then you can have an Uber that says, yep, people are still happy to pay up to go get themselves a ride. It is confusing. And again, within within even the same company, it's not even clear.
At the same time, Disney, we know, is going to be boosting prices for their streaming services. I imagine the administration will come out and say this is streamflation. People should have access to cheaper streaming. But what's interesting, will this bite them in the butt, basically, because they're now profitable? Will people pay up? Given the fact that, what did we just hear from Michael Darda? He's saying what he's seeing in the conference board. Underneath the surface, people are trading down.
How much churn are we going to see in that business in the coming quarters? Do you still get Uber? I've stopped so much. You know, I've pulled back a little bit. I flag yellow cabs now. It's getting too expensive.
Well, I mean, I get a ride into the mornings here, and that's about it. I'm a public transportation gal, through and through, absolutely.
So am I. John is not.
Yellow cabs aren't public transportation? We don't class them as public transportation?
Are you with other people you don't know in the yellow cab?
Do you have to be?
Well, to be public transportation,
Should I start sharing cab bribes? Is that what you're suggesting?
That's the only way it would be really considered public transportation.
Okay, I'll consider that after work
or
later.
Take the bus.
Coming up, Mohammed Al-Erin of Queen's College, Cambridge, on why the Fed should resist placating markets. Looking forward to that conversation. The Disney CFO, Hugh Johnston, on the company's third quarter results, and former New York Fed President Bill Dudley on why he sees volatility ahead. Fantastic lineup through the next hour on Bloomberg Surveillance. We begin with our top story. Markets continuing to rebound following a three-day pullback. Mohammed Al-Erin of Queen's College, Cambridge, writing in a Bloomberg opinion piece, quote, rather than allow itself to be bullied by markets, as occurred in the fourth quarter of 2018, the Fed should stand on the sidelines and let the market overreaction play out. Mohammed's back with us. Mohammed, good morning. It's good to see you.
Good morning, John.
Do you think the BOJ is doing the wrong thing this morning and blinking?
I do. I think what they meant to do is to press the pause button instead of press the rewind button. So rather than provide the market the opportunity to exit this carry trade in orderly fashion, they've given a signal to the market to put on more of the trade. And that ultimately is going to conflict with their domestic economic requirements.
Do you think that central banks are afraid to lead in this moment? And if so, why?
I think no one wants to be the Volcker moment. So what they'd rather do is see someone else try to do it. And if you need to reverse course, let them reverse course. I suspect there was enormous external pressure on the Bank of Japan last night. You probably went to bed too early, but Japan